Good morning, ladies and gentlemen. Welcome to the 2022 Fintech Week. Please, a round of applause. Some excitement. It's the 2022 Nigeria Fintech Week. Thank you. We are so glad that you could join us. Thank you so much for being a part of it. You know, ladies and gentlemen, it's an exciting time to learn, to network, and to co-create solutions to the challenges that affect us as an ecosystem. So we're truly glad that you could join us physically or virtually. My name is Temi Badru, and I'm your host today. Now, speaking about physical gatherings, has anyone observed that this is the first physical gathering of the Nigeria FinTech Week since the COVID-19 lockdown? Has anyone observed that? This is the first one. Okay, so in that spirit of excitement, because I am excited about that we can finally meet in person and also virtually. So in that spirit of excitement, please look around to people seated around you. Give them a warm smile that welcomes them. If the person around you is not smiling at you, pick one person and smile at that person. If the person around you is not smiling, please smile at them till they respond with a smile. So please pick one person, give them a warm smile. Thank you. And then give them a high five. Please give them a high five as you welcome them to the 2022 Nigeria FinTech Week. Thank you. Meanwhile, our virtual audience are not left out. We don't want you to miss out on all of this. So please, right there on Zoom, drop a message. Tell us your name, tell us your location, where you're joining in from, and also drop your own high five emoji. We want to see it. We want to see our participants who are joining in from Nigeria and beyond. Please chat with us on Zoom. We'd love to hear from you. Ladies and gentlemen, this conference promises to be impactful, insightful, and fun. Now, speaking about fun, here at Landmark, we have the exhibition booths that would love for you to tour and just get a sense of what our exhibitors are doing. Also, we have a gaming center, so you can just go in there, play games, and have fun. That sounds like fun, right? In addition to this, we also have a medical center where you could, just go and do your vitals at no cost, free of charge. Please, a round of applause for the Nigeria FinTech Week. So much packed. It's going to be learning and fun. So it's a cocktail of learning and fun. Now, as always, you can join our conversation online. You can connect with us on Twitter. And I think this is a good place for us to bring out our phones and just connect with us right away, because this conference is going to be packed. And just as we're speaking, you want to tweet at us, you want to send us a message, you want to repost, that's a good thing to do. So please, bring out your mobile devices on Twitter. You can find us at FinTech Week NG. On Twitter, connect with us at FinTech Week NG. On Instagram, at Nigeria FinTech Week. On LinkedIn, it's Nigeria FinTech Week on LinkedIn, and on Facebook, Nigeria FinTech Week. Please connect with us and engage with us. As a matter of fact, at this moment as I speak, we are trending on Twitter, and we want to keep the conversation going. So please use the hashtag NFW2022 when you post, when you take that selfie, when you take that picture, when you repost. Please use the hashtag NFW2022. Once again, my name is Temi Badru, and I'm privileged to be your host for this conference. Now, let's begin with a message, an opening remark by the president of the Fintech Association of Nigeria. Ladies and gentlemen, with a resounding applause, with a fintech ecosystem applause, please join me as I make welcome Ade Bajamo, president of the Fintech Association of Nigeria.
Thank you very much, Temi. We're going to make a start, as Temi said. Come rain, come shine. Fintech goes on. The show goes on. Distinguished ladies and gentlemen, thank you for being here with us today, both on-site and online, at the 6th edition of the Nigeria FinTech Week, the first to be held physically since COVID-19 pandemic. I hope we're all charged up this morning, excited to learn, share ideas, visions, develop strategies for the progression of both the Nigerian and global fintech ecosystems. It is with great pleasure that Fintech Association of Nigeria, its board of trustees, we're very privileged to have a couple of members here, my brother Patrick, governing council members, the staff and management, and of course, members of the Fintech Association and its many partners to bring you this event. The Nigeria FinTech Week is an opportunity to showcase new thinking, solutions, thought leadership, and products by the local fintech ecosystem. The theme and overarching focus for this year's meeting is navigating the next normal, sustainable impacts in fintech, e-government, and emerging technologies. In the current climate, environmental, social, and governance discussions are top of every executive agenda. So are issues around extreme poverty alleviation, economic growth, and digital inclusion. When fintech NGR pursue these goals, like connecting the fintech ecosystem, accelerating the development of fintech ecosystem, and indeed advocating for fintechs, we do so working with our ecosystem to also place these very important discussions at the center of the next wave of solutioning and innovation. A recent report published by the International Data Corporation shows that the global spend on digital transformation, the engine behind the digital economy, will top $6.8 trillion in the next year. And this figure will increase by almost 16% year on year. At the same time, it is expected that 65% of the world's GDP will be digitalized by 2024. You will agree with me that digital transformation without sustainability, which is key to the theme of this event, and consideration for its impact on the wider ecosystem is irrelevant to the dynamics of the 21st century. The Nigerian fintech industry has been a trailblazer in this digitally transforming world. Coming from its infancy barely 10 years ago, it now leads Africa on several fronts, ranging from funding, scope and depth of innovation to providing leadership in payments and driving regulatory alignment to create an environment for growth, jobs, and prosperity. The fintech ecosystem has also witnessed significant growth in the last 5 years, from foreign direct investments, which was barely at $53 million a year, growing to nearly $1.3 billion in 2021. There's been a slight decline in 2022. The latest figures as of Q2 was about 731 million, but we hope that by the end of the year, we will at least meet or beat the 2021 numbers. Our job as an ecosystem facilitator is to proceed at any length to ensure we achieve the full potential and continuous and exponential growth. Despite significant strides in payments, lending, wealth tech, we're still largely scathing the surface when it comes to deep technology revolution. There's still room for new innovation in several sectors, huge opportunities in agri-tech, insure-tech, ed-tech, health tech, prop tech, and blockchain adoption. We also need to start deepening the entire ecosystem at a much more fundamental level, building skills and solutions based on deep research, science, technology to develop and manufacture computer chips, hardware, operating systems, and indeed the fourth industrial revolution capabilities such as machine learning, Internet of Things, and AI. You might say, gosh, all of these are jargons, but we're a huge consumer of these goods and services, and we can't keep being consumers. We have to actually now go 2-3 levels deeper and start powering the industry and solving our own problems and enriching the wider global ecosystem. Our industry is developed, as with Nollywood and Afrobeats, largely with minimal government support and intervention. This is a critical juncture for our government and regulators to further raise the bar and support fintech NGR and the wider ecosystem in taking this industry to unprecedented heights through well thought out collaboration, initiatives, policies, and interventions. We must be the digital light and trailblazer to Africa and the world. We need to move with a renewed commitment and deeper partnership in this respect if we are to address the recent dwindling economic realities and the urgency to lift millions out of poverty. With over 40 million people yet to be financially included, the opportunities are enormous. The IFC estimates that we have about 87,000 developers in the country today. We need 1 million developers to power the next level of digital transformation. Funding for research centers' capabilities has to be top of mind. And at Fintech NGR, I'm extremely excited of our critical role in solving some of these problems and orchestrating the numerous deliveries, and we've achieved some of these. We introduced the DigiQuip series with over 400 students from 40 institutions across the country trained to address the talent gap issue. But this is just a drop in the ocean. Our DigiCorp program is equipping NYSC participants for the future of work, while DigiSkills is also targeting institutions, associations, individuals who want to upskill and will commence this year. We have a Regulators Forum, the first and one of its kind in Africa to date. This is where regulators and innovators meet in an open environment to address and solution forward-looking and innovator-friendly regulation with appropriate consumer protection baselines. And this continues to deepen, and with partnership with the World Economic Forum. I thank the various regulatory bodies and participants for making this happen. We have advocated and participating in shaping the outcome of several issues that are critical to the development of our nascent industry, which includes the Nigeria Startup Bill, digital Indian initiatives, to name a few. We aim to continue to strengthen our advocacy role in a positive and collaborative manner. We've worked with other institutions, such as the Chartered Institute of Bankers, to develop an MOU which would deliver a curriculum that would deepen the skills of our fintechs in critical aspects such as risk management, cybersecurity, and broader financial services skills. And we will continue to work with other participants, regulators, Central Bank of Nigeria, Securities and Exchange Commission, NITDAP, NCC, NICOM, and of course, Enterprise NGR, to name but a few. Let me seize this opportunity to particularly commend the Central Bank of Nigeria on the first anniversary of the e-Naira launch. This is also being launched at the same time in parallel today at a different venue. And also the Securities and Exchange Commission for putting forward market-leading regulation on digital assets. We thank Fintech NGR members and wider stakeholder community for the immense contributions in shaping these policies, in producing these papers that make this happen, and trust you will continue in future years. The track record of our successful collaboration with Singapore Fintech Festival, that's the largest in the world, has opened further speaking opportunities for Fintech NGR at this year's Singapore Festival, holding on November 2nd to 4th. We hope you can join us there, online or in person. It's going to be great. Again, great speakers and participants. Fintech NGR will strive for more international partnerships and collaboration. And we aim to position Nigeria as the go-to destination for fintech innovation and investments. In closing, we must not be naive to the various detractors, those who pose as fintechs but operate shady organizations that cannot be part of our ecosystem. We must also recognize that we cannot avoid contrarian views and scrutiny about our industry and operators, which clearly is altering the status quo in innovation and competitive trends and creating opportunities for a new generation of entrepreneurs in Nigeria and the world at large. The data points clearly show this and must be quite disturbing for incumbents that are unwilling to change. In fact, we must welcome contrarian views, and our members must reflect on further steps to take to further strengthen and sustain the industry and their businesses. Fintech NGR will continue to facilitate and collaborate with regulators to create a safe and secure financial services environment for the growth of our industry and our great nation. We have a unique opportunity to position Nigeria at the heart of Africa's digital transformation growth, and we and our 300 plus members will drive this irreversible trajectory. As in previous years, we expect that deliberations for this year will go many steps further to generate pragmatic ideas, forecast strategies that would advance new development and further spur the growth of the ecosystem. We have over 80 distinguished, well-informed participants participating at different levels on this conference. And I think it's not just going to be a talking shop, it's going to be one where people are going to get ideas, germinate ideas, and raise the bar in whatever they're doing. I'm extremely excited to be part of this revolution. together with the rest of the GovCo and the leadership team at Fintech Nigeria, where Africans are resolving African problems, leveraging global technology, global partnerships, and collaboration. But it is more than that. As an ecosystem, we're building the next wave of founders, innovators, creators, national award winners, which we had 7 in 2022, and congratulations to them, who would drive Africa robustly into the 5th industrial revolution. I'm counting on everyone to re-engage in this respect and be part of this formidable and laudable movement. Thank you, and have a great conference. Thank you.
Thank you very much, Adebajo Mo. Ladies and gentlemen, if you would agree with me, at the end of his presentation, he did mention that, this is not just going to be a talk and talk affair. It's going to be talk and do. And if you take a look down, memory lane, you'll see that the FinTech conferences over the years has brought so much impact. I mean, there's been so much to say about it, the impact. And then we look forward to another conference that would be impactful. Now, at conferences like this, I usually say that everyone comes with a reservoir of applause. So there's this one that we cannot see, is a reservoir of applause. It's abstract, so you can't see it. But I just want to ask us, I want to implore us today, those who are joining physically or online, to please be gracious with our reservoir of applause. Give it freely. When I invite the speakers, please applaud them loudly. Let's celebrate one another. Please, can we do that? Thank you. We are warming up. Even though it's a cold morning, I know we are warming up. So that's applicable for our on-site audience as well as our online audience. We'd love to see your clapping emojis right in the chat box. Now, ladies and gentlemen, it's time for the keynote address. All right, but before we go into the keynote address, let's take the fireside chat. Would now like to take the fireside chat, and it's focused on fostering sustainable impact in fintech, e-government, and emerging technologies. Fostering sustainable impact in fintech, e-government, and emerging technologies. And I'd like to invite the speakers and the moderator. Now, the first panelist is Ebenezer Onyegu, the GM, the CEO of Zenith Bank, who is represented today by Henry Oro, the MD of Zenith Bank. A round of applause, please. Thank you very much. As we welcome him for the fireside chat, please come take your seat. Also, we have the CEO at eTransact, Niyi Toluwalokpe. A round of applause, please. Thank you. Remember what we said about the reservoir of applause and being gracious? So that we are not, guilty of being partial. Let us applaud everyone equally and graciously. We also have on this panel the manager of Fintech's MasterCard West Africa, Tolulokpe Adeyinka. A round of applause. Thank you. And to moderate this panel, I'm honored to bring up the CEO, Enterprise NGR, Obi Ibekwe. Please, let's give her a round of applause. I'll now be handing over to the moderator to take it on.
So good morning, ladies and gentlemen. Once again, my name is Obi Ibekwe, and I'm delighted to be your moderator for today's panel discussion on the topic, fostering sustainable impacts in fintech, e-government, and emerging technologies. Fintech in Nigeria has witnessed rapid growth from just a handful of companies in the early 2000s to about 250 in 2021, supporting quite a number of financial products. They're also attracting significant investments, foreign direct investments into Nigeria. The impact of technology has been accelerated by the COVID-19 experience, and as pointed out by the president of Fintech Nigeria, Mr. Bajamo, in his speech, 65% of the world's GDP will be digitalized in the next 2 years. That's significant. That is significant. And The issue we will be examining this morning is one, how sustainable is this growth that we've experienced in fintech in Nigeria? How sustainable is it? It's been rapid, yes, but how sustainable is it? Are we putting structures in place, such as skills building, research capabilities, solutions and manufacturing capabilities to sustain it long term? We'll find out. Again, how impactful has technology been beyond the financial space? For instance, how has it impacted governance, healthcare, education, transport, agriculture? We see what is happening in other jurisdictions and how is Nigeria keeping up pace with the world in this regard. And finally, how are we positioning in Nigeria and Africa as a whole, come to think of it? As Mr. Bajomo put it, it really struck me when he said it, that we need to be major contributors to the global technology force and not just consumers or fringe participants, solving our own problems and enriching the global ecosystem. We don't want to be recipients perpetually. We want to also contribute to the global ecosystem. So it promises to be a very exciting panel discussion. And I have with me today 3 distinguished panelists to help throw some light on these issues. Without further ado, please join me in welcoming, as already introduced, Henry Oro. He's representing the CEO of Zenith Bank. Niyi Toluwalokpe, he's the CEO of eTransact. Okay, and Tolulokpe Adeyinka, the Fintech Business Development Lead, MasterCard West Africa. Thank you all for honoring our invitation. So, Henry, I'll start with you. The first question goes to you. Zenith Bank PLC is today one of the biggest banks in Nigeria. How do you see your role in supporting sustainable impact and digitalization of the financial sector in Nigeria?
Yeah, thank you, Obi, and good morning, ladies and gentlemen. It's my great honor to be here representing my CEO, Ebenezer Oyango, who incidentally is one of the key speakers in a similar program happening right now at the Echo Hotel, sponsored by the Central Bank of Nigeria, talking about the e-Naira. So what that tells me is that Zenith Bank is central to the development of digitization and of digital economy in Nigeria. First and foremost, let me also congratulate the Fintech Association for this program. It's all about the narratives we want to see and hear as we develop the payment system in Nigeria. For us as a bank, we have been built on 3 tripods. A tripod, which is technology, people, and service. People, technology, and service. When we founded 3 decades ago, those were the pivot that Zenith Bank was founded on, and over the years have evolved. Information technology is critical to our operations. As a matter of fact, we have pioneered a lot of things in the payment system. When you hear of payment notification, which is the LLC, we are very proud to say that Zenith Bank pioneered that system. And over the years, we have evolved. Today, you can reach Zenith Bank and transact with Zenith Bank through so many channels, omni-channels. We have agents all over the country. We have merchants. We have POSs. Over 200,000 POSs deployed, close to 100,000 agents around the Nigerian market. And we have over 3,000 ATMs in the market. And we have so many channels. the Global Pay is an engine that we have that is unique among the banking system, and we're also collaborating with other fintechs through our Global Pay system. We have the mobile app, which is also very popular, one of the most popular apps in the payment system in Nigeria. So Zenith Bank has been a pioneer in developing technology in the payment system, and that has been one of the reasons Zenith Bank is also a significant player in the market today. But what are we doing to develop it further? We also know that the requirements are getting bigger, the complexity of transactions and the scale of transactions are getting bigger. So we are also trying to reform and transform our legacy system to prepare us for the next decade of growth, all right? So in that sense, we are more or less trying to transform the entire technology infrastructure for Zenith Bank, like a major heart transplant, right? The entire core banking, the modules around the bank, we're transforming all that. And that's a huge investment to make us agile and ready for the next phase of growth and to prepare to even scale with the fintechs. So in that sense, I'd like to say that Zenith Bank is well positioned to support the fintech activities in Nigeria. Zenith Bank is doing all the, making all the investments that are necessary to make that happen, all right? And beyond the transformational growth we are carrying out, we're also doing we are trying to create a digital bank, all right? In the next couple of months, you get the announcement to hear that we are building a digital bank where it's not about the brick and mortar. We also want to build that app where our customers can reach us for payments and for collections, and that will be deployed across our subsidiaries, and that will be a strategy for us to reach out to other markets in Africa. So in that sense, we as a bank are proud of what we've done, and we're doing so much more, making the necessary investments to see that we make our services available, cheap, and affordable to our customers. Thank you.
Thank you very much, Henry. Where no doubt Zenith Bank is a leading bank in leveraging technology for efficient, improved financial services. Now we move on to Mr. Tolu Alokwe, eTransact. Nice, okay, great. eTransact is one of the foremost fintechs in Nigeria.
Absolutely.
Dating back to the early 2000s. How do you see your role in supporting sustainable impact in the fintech ecosystem in Nigeria?
Okay, absolutely. Thank you very much. Apologies for a little lateness. I'm very happy to be here and part of this gathering today. For us at eTransact, we are pioneers in the whole fintech space, dating as far back as 2000, like you rightly mentioned. But over the years, for us, it's been a state of continuous and consistent evolution. We've seen it all. We started just right after the mobile telecoms GSM was launched in Nigeria. eTransact started the concept of mobile banking and SMS banking in this country. And we can see how that has empowered banks and banks being able to serve its various customers across the financial ecosystem space. Shortly after that, over the years, again, the concept of USSD, star 389 hash, started out of eTransact as well. And yeah, we've set the pace in the industry, and we're excited about that, which is why we're very happy when we see new things and new ideas come up into the space, you know. But how do we see things evolve so far? As a switch, we partner with banks. We enable banks to serve their customers. Now we also enable other financial institutions, other fintech institutions to do transactions and serve their last mile customer as well over time. We've also moved into financial inclusion, mobile money, pocket money. That's an eTransact product. That was the first mobile money product in the country as well. And we've built an vast agent network, an agent ecosystem over the entire country that's serving governments, even in tapping the value they see in the informal sector for IGR. So for us, like I said, we're always very happy when we see how things have evolved over time from some of the ideas and innovations we've set in place. If we look at the future of fintech, it's very exciting. You see the amount of venture capital money, amount of private equity money that's following new ideas, new products, new solutions, and new innovations in this country. We've looked at some data in the past that showed how Nigeria was going to be the biggest fintech environment on the continent. It used to be South Africa. Based on the trajectory and the growth we see, Nigeria should have superseded South Africa by now. For us, that's exciting because as a switch and a back-end processor, a core infrastructure provider in the financial services ecosystem, we have assumed the position of not just enabling banks, like I said, also enabling smaller fintechs that need to reach the last mile customer. So we see ourselves not just as a switch, not just as a fintech, but a super fintech. What does that mean? We're a fintech that's enabling other fintechs. And that's how we think the fintech industry will grow. That's what eTransact is all about now. We're ready to collaborate. We have good partners here. Zenith is a great partner of eTransact already. We know that. Just this morning, we had a call on business. So this is some of the good things we see that's defining the future of the sector. And I think if some of the news and stories I've read in the past have shown that the growth and the expansion and the productivity we're seeing in the fintech space will surpass most of the other developmental opportunities we're seeing across the continent. Why? Fintech is solving our problems in Nigeria. We have young, smart people in various hubs with very good ideas, creating solutions and products, addressing our daily lives and problems here. Those are the key things that are driving the explosion we're seeing. So for us, we're happy to have been one of the platforms to pioneer this. And we're ready, fully capitalized, infrastructure is in place to enable other fintechs and dominate the sector as a super fintech. Cheers.
Happening in the fintech space. I particularly like that statement about being a super fintech, enabling smaller fintechs, because that is how growth and sustainable growth happens. Thank you very much for that. So I move to Mr. Denyika from MasterCard. MasterCard is a global player in the fintech ecosystem. How do you see your role in supporting sustainable impact in the fintech ecosystem globally in Nigeria and sub-Saharan Africa?
Thank you very much for that question. MasterCard, being the origin that it is, has been operating in 172 countries, supporting fintechs globally. But we probably underestimate how far we have come in the fintech industry. Globally, what we're trying to do is to displace cash, basically to ensure that commerce takes place as it should. And when commerce takes place as it should, there is speed, there is efficiency, and it impacts on the economy. MasterCard provides the technology that supports the various enablers in the market to ensure that they're able to provide the support that the economies across geographies need to support their different populations in those countries. When we speak about financial inclusion in particular, we realize that in Africa, for instance, there are over 750 million adults that are bankable. But out of this, only 400 million thereabouts have bank accounts. And you can see that out of that 400 million, maybe just about 150 to 200 million have wallets and they don't have real bank accounts. So there's huge opportunity which MasterCard is innovating with other fintechs. And what we have been doing is to support innovators in the market who have the knowledge, the local knowledge of how the consumers what the consumers want, and what they want to see in the market. So what we do basically is to work with them provide the platforms that they require and the support and investment, bringing our global knowledge, because of course we operate in 172 countries. So over the years, we have garnered a lot of knowledge around the world to be able to bring solutions to people in their various geographies. And let me also put some context to it. Today, you go on a website, you are purchasing something, and you find that you are able to pay. And if, for instance, that was not available, and you had to order something, for instance, from Abuja, and you are in Lagos, we underestimate what happens when you have to move that cash all the way from Lagos to Abuja, and then you have to come back with your goods and services back to Lagos. This probably will take you 2 weeks, 3 weeks. But what the technology has done is to provide the basics, the basic technology for you to be able to transact without you even knowing, for you to pay as a consumer, for you to accept payments as an SME, as a business, and for you to be able to send goods and services across board through logistics platforms. So what MasterCard has done is to invest in so much of technology, in cyber and intelligence, in artificial intelligence, of course, and in different payment capabilities that empowers different people to make payments across the globe. So today we see that we are improving in financial inclusion in Africa, and we are investing in a lot of fintechs, and that is definitely going to continue. We are also seeing how we are working with governments across the different continents, particularly in Africa, working with different governments to help them provide solutions that meet the market needs. For instance, we see that in various jurisdictions, there are different laws that apply to how they want to operate in those countries. What MasterCard does is to enable that market, to support fintechs and guide them to ensure they abide by the rules and regulations of those jurisdictions where they operate. Because we understand what the governments in different countries, what they want to achieve, what we do is to ensure that these innovators, when probably they want to start, and they provide the direction that they require to ensure that they innovate right and they innovate responsibly. That is one of the things MasterCard is doing in the market.
Very much, Mr. Deyinka. That was very interesting, giving us that global perspective. And I connected to the example about the being able to purchase stuff online, because that's how we survived COVID-19. So that technology definitely has changed all our lives and been accelerated by the pandemic. So, gentlemen, please, our time is going. I would please ask you to be brief with your next responses to the next questions. Okay, so moving on. Henry, I'm coming back to you. And this time, I would like to, we've talked about all the exciting things that are happening, the growth, etc. But as Mr. Adejomo said in his address, if digital transformation does not impact the wider ecosystem, then it's not, as useful as we would like it to be. So this next round of questions is looking at how we've taken technology beyond the financial space. So for Zenith, we'd like to know, what should we expect from Zenith in the next 5 years? Is sort of a prediction of what it would contribute towards supporting e-government initiatives and insight into Zenith Bank foray into emerging technologies such as cloud adoption. What can we expect from Zenith in the next 5 years in this regard?
All right, thank you for that question. We all agree from the first round of discussions we've had that digitalization is an enabler to e-commerce. So if digitalization has to make impact, we have to take it across the various economy, the various industry, across the society as a whole. And for us, what we have done in that respect is to see that we take digitalization to the SMEs. Today we have a program that we are projecting, which is Grow My Business, the SME also Grow My Business, the Hustle Academy, in collaboration with Google. What we do is to reach out to the SMEs and train them on how to use the internet, how to use the digital channels to grow their business. And that is getting a lot of followership and making a lot of progress in that respect. We're also looking at how we can also empower the students, the upcoming students. We go to the universities, identify those in science, technology, engineering, and mathematics, and give them training in computing, and also mentor them and follow them through through the academic work. And once they are done, we also find a way to train them beyond that and make them ready for the industry, and also use that as a feeder pipe for our own bank. So in that respect, we believe that Zenith is making a lot of contribution on how to grow on the Fintech area. Now, talking about cloud and AI and all that, it's the emerging technology and all that. What does cloud seem to achieve? Cloud seems to bring agility, speed, and capacity. These days we have banks and companies building their own infrastructure and replicating that. That is pretty expensive when we have infrastructure in the cloud. So the cloud technology is something that sooner than later everyone has to embrace. And today, Zenith is building its own private cloud, and we're also on the public cloud. People speak about security and data privacy and all that. I believe the cloud technology is taking care of all that, right? So for us at Zenith, we have a private cloud we're working on, and we're also working on Azure, which is the Microsoft cloud. And we do that because, like I said, it promotes scalability, promotes portability, and of course, it also reduces downtime. So the cloud technology is something we embrace and something we're investing in, and it's something we also want to use to drive our business moving forward. Thank you.
Thank you very much, Henry. Neve, so what should we expect from eTransact in the next 5 years? Again, it's like Zenith has, give us a prediction of what the fintech ecosystem will look like. Insight into eTransact foray, into emerging technologies such as blockchain technology. How will this support or trigger e-government initiatives?
Absolutely. Thanks. So, just following up on what I had said a few minutes ago regarding positioning as an enabler. This is why we've taken that initiative. We are seeing a lot of new ideas, new products and services coming up that need the infrastructure and the backbone to be able to meet and reach their last mile customers. And a lot of this, because the fintech industry in Nigeria is regulated, and there are certain criteria you need to have to be able to build certain capabilities, and you need licenses for that. Unfortunately, not everybody has the capital resource or even the networks to build those capabilities and get those licenses. So what you're seeing is a lot more specialized focus on building solutions and then looking for partnerships and collaboration to do the necessary integration and consummate transactions across the globe. At the end of the day, what do we really need in terms of consummating transactions? You need partners that can help you move money from A to B. Call it any kind of solution, call it any kind of product. You need to connect so that individuals that are using that service can actually do the consummation. So we've seen a lot of that growth, and you all can see the funding that is coming into this part of the world to drive a lot of those solutions and services. So what's going to help is that enabler that's going to help facilitate all the ideology, innovation, ideas, and processes to help those type of solutions grow. Now, you see what's happening a lot in government. Historically, It was all about IGR, that's how government, state governments, federal government make money. We also saw what happened with the TSA, digitizing connections, digitizing collections and payments of government transactions and government expenditure. Now, that also has happened in the States, but people need growth. Nigeria needs to make a lot of money. We need to look internally as to how we can drive that. So eTransact has partnered with a lot of state governments looking into their informal sector. How do you drive and digitize what happens in the informal sector so that government can understand how to identify, capture, track, and understand how people operate in there, and also we have developed solutions that allows them to digitize and automate collections in the various cluster groups across local governments, across states, across the entire country. For us, that's driving a lot of digitization happening currently across the state governments, and it's helping to increase revenue for state governments, and it's helping all the states understand how to drive transactions from the untapped areas within their state. So for us, over the next couple of years, as more ideas, more money come into this space, I'm going to see. I'm anticipating consolidation at some point. Where you're gonna people are going to need to merge. You're going to see a lot of mergers and acquisitions in this space, and trust eTransact. We're out there looking for very good apples to apples companies we can partner, collaborate, or even acquire, and further diversify the entire system and dominate the market as a super fintech. Thank you.
Thank you very much, Lee. That was a very robust answer, and if time permits, I will come back with a follow-up question because I was quite interested in the idea you raised about helping government access the informal sector. The fintech in connection with the financial industry can play a very significant role as far as that is concerned. Yeah. Okay, so Mr. Deika, coming to you on this aspect, what should we expect from MasterCard in the next 5 years? This, again, give us a prediction of what the fintech ecosystem will look like and insight into MasterCard foray into emerging technologies such as contactless payment.
Okay, thank you. One of the key things that MasterCard plans to achieve by 2025 is to bring 1 billion people into the digital economy by 2025. And one of the ways to achieve that is to displace cash. And we are working with partners across the globe, particularly in Africa, where cash is prevalent in retail, to empower various sectors in making sure that we achieve this by 2025. There are a lot of partners working in various sectors. We are beginning to see a lot of trends, for instance, where about 3 to 5 countries in Africa, for instance, have launched a startup act or a startup bill where they are trying to promote the digital economy. And this shows that there is an impact that's going to have in another 2, 3, 4, 5 years. Because African governments are now seeing the viability of the digital economy, the impact it has on economic growth. MasterCard is available to provide the solutions and support that the ecosystem needs to survive in that kind of environment. And basically, because of COVID-19 that happened in 2020, we happen to have seen a spike in contactless payments. And because of that, a lot of innovations have come into play from various fintechs. You realize that people can now, use their low-cost acceptance channels to accept payments from contactless cards. We are providing the technology to ensure that retailers across board, for instance, in the FMCG sector, where you see that retailers particularly operate in cash. If you go to a store to buy maybe a drink, you find that what you can do is just pay maybe 100 naira or 200 naira to buy a drink, which is cash. But these retailers find it difficult to be able to accept payments because the cost of probably buying a POS terminal is kind of expensive. So we are providing the solutions to ensure that these small retailers are able to accept payments at low cost. And these are some of the ways that MasterCard is seen in areas of PMPL, artificial intelligence, alternative lending. We are providing solutions in those areas, and we expect that by 2025 we will be able to achieve our goal of 1 billion people in the digital economy.
Session at this time because we're supposed to take the keynote speaker's speech at 11 o'clock virtually. So because of our virtual audience, we need to keep to time. So at this point, I would like to introduce Mr. Mark Elliott. He's the Divisional President, MasterCard Sub-Saharan Africa. He's joining virtually, and he will be speaking on navigating the next normal. Thank you very much. Our panelists, please wait.
Thank you very much. Please, a round of applause for our panelists and the moderator of the fireside chat. Now, ladies and gentlemen, before I bring up the next session, which is a keynote presentation, I think it's a good place for us to have a quick icebreaker. This is called Never Have I. And I'd like everyone in this room to participate as well as those who are online. Now, the rule of engagement or the rule of the game is very simple. If you have never done something before, you raise your two hands. If you have done it before, that means your two hands are down. Again, it's called Never Have I. If you have never done what I mentioned before, please raise your two hands. If you've done it before, please keep your two hands down. That's how the game will go. And for our virtual audience, please drop the hand or the high five emoji right here in the chat room. So let's begin. Never have I saved money in a piggy bank, which is called Kolo. If you've never done that before, please your two hands up. Never have I saved money in a piggy bank called Kolo. Okay, one person. You have to raise it very high. Okay, we have one person over here and one person over here. You never did that. Okay, let's try this one. Never have I pretended to get on a phone call to avoid talking to someone. You've never pretended to get on a phone call to avoid talking to someone. Okay, we have somebody over there. Okay, this one is about ATM. Never have I, again, the rules of the game is if you've never done it before, you raise your two hands very high. If you've done it before, you keep them low. Never have I counted money immediately I got it from an ATM. It's true. I won't raise my hand because I've done it. I counted the money unconsciously and someone said, you want to return it. So if you've never done it, please raise your two hands. That means everybody has counted money that they got from the ATM. We're all guilty and we're laughing because we're guilty. Okay, let's take this one. Never have I given a compliment to a total stranger. You've never given a compliment to a total stranger. Anyone? One person, please, before you leave this conference, give a compliment to a total stranger. We'd love to see this. And finally, never have I withdrawn money from a savings app to buy something impulsively. You know, you go shopping and you withdrew the money you were saving just to buy something impulsively. Anybody that's never done that? Okay, we have one person over here, one person. Great. All right, so we'll continue the game as we go on with the conference, but now it's time to have the keynote presentation, and the focus is on enabling the new era of financial services, safeguard, control, optimize. Ladies and gentlemen, with a resounding applause, please join me as I welcome the Regional Manager, Sub-Saharan Africa at SAS, Babalola Oladoko. A round of applause, ladies and gentlemen.
Good morning, distinguished ladies and gentlemen. I'm very delighted to be here to speak to you and to be a part of this wonderful conference. it's my honor and privilege on behalf of SARS to contribute our own quota to this very nice and august occasion. As has been said, I need to see the slides. I mean, more or less, you need to see the slides. I'm speaking on enabling the new era of financial services. And the truth is that the era is upon us here. I'm not here to talk to you about the era that is dawning, the new day. There is a lot that has been said about the fact that our industry, the financial services industry, is witnessing a lot of transformation. But I mean, from payments to remittances to insurance technology, a lot has been said about what is happening, and the landscape has changed significantly from what it used to be. And with all that has been done, there is still a lot that is still at stake in terms of room for development. As a matter of fact, a recent survey by PwC says that 36% of the adult population in Nigeria, which is about 30 million, because the population is estimated to be 100, that's the adults. So we're talking about 30 million people that are still unbanked, that can still be served with all the technology and the new business model that fintechs are bringing around. But I am here to talk to you about how do you enable this new era. Because as much as there is a lot of opportunity, I need to tell you that, sometimes good and bad, they work together. Okay, so we have learned that COVID-19 is arguably the biggest facilitator of digital transformation. I remember seeing a cartoon, and the cartoon says, what is the biggest accelerator of digital transformation? CEO, CIO, CFO, and the last one was COVID-19. Obviously, the right answer is COVID-19, because what we thought was going to happen in 5 years was collapsed, and it happened in 12 months. So businesses were forced to migrate digitally. Some were more ready than others. My big guy here, you guys are ready, you are even leapfrogging, So some were more ready than others. Work from home became the norm. For instance, my office, we closed our office in Ikoyi temporarily. And even after COVID had subsided, they asked me, do you want to reopen the office? No, I don't want to do the commute. I don't want to pay the huge bills. I enjoy the flexibility. I want to spend more time with my family. Okay, so businesses open to more channels. There were a lot more channels that were open. Everybody now knows that you can't do business without being on the internet. Social media, mobile, the internet became the norm. Now, beyond that, technology scaled up. Everybody scaled up in terms of what they are doing. Okay, now this is the good side. Like I said, the volumes also went up because suddenly we saw the opportunities and the extent to open new frontiers for all our businesses. The downside, which I call the dark side of digital transformation, is that as you are taking advantage of this new era, the fraudsters are also getting ready for you. Again, so I don't have the slides. I'll just keep talking. I will not make any effort to use the slides again. In the same way, I said the businesses were migrating to digital. Flash. The fraudsters are also migrating to digital. I said work from home. Work from home opened a lot of opportunities, but to tell you the truth, work from home also opened opportunities for fraudsters, whether people who are internal or people who are external. People are working from home, they have more time to think, there are no restrictions of people around them, and then they can think of doing their nefarious act. So digital transformation has its positive and has its negative. And I said, technology is scaling. The good news, the bad news is that fraudsters are also using technology. They are also scaling. Cloud, artificial intelligence, they are also doing that. So what am I saying? Am I saying we should go back to the bad old days? No, not at all. I'm not asking that we do that. All I'm saying is there's got to be an optimal balance between what we are doing in terms of digital transformation and ensuring that we are keeping ourselves. You are safeguarding, you are controlling, and you are optimizing what you are doing. How do we do this? The way we do it is leveraging artificial intelligence, machine learning, and cloud technologies. And this is what SaaS has been doing for 45 years. Okay? The truth is that there is a limit to what human being can do. Let's look at the area of anti-money laundering, for instance. It has been said that the amount of money that is laundered globally is in the neighborhood of $3 trillion. That's between 3 to 5% of the global GDP. Now, our effectiveness as an industry is estimated at about 5%. So with all the effort that all of us in this room are putting together to stop fraudsters, it's said that we are only efficient like 5%. Why? Why is our efficiency limited to 5%? One, there's a lot of manual intervention. I'm speaking to one of the banks in Nigeria, and the guy who is heading the money laundry there says, look, I am just tired. I'm just waiting for you guys to deliver this solution. I'm waiting for the management actually to approve so that we can have this automated. I am tired of manual. There is so much that a human being can do. If you like, put a lot more people. There is a limit to how much our physical eyes can see in terms of trend or in terms of stopping fraud. And all these challenges I'm talking is not even limited to fraud and anti-money laundering. You can look at it from the perspective of risk management, market risk, credit risk. How do you know if somebody borrows money is going to pay you back? There is a limit to how much an individual, but a machine is not limited by time. A machine doesn't get tired. And then when you leverage artificial intelligence and machine learning and analytics, then what you are able to do is you are able to focus on your core area of, your banking, your fintech, whatever it is that is your core area, and let the machine do its work. So that is what we do in SaaS. And I remember, unfortunately, in the US, a Nigerian fintech was slammed not only with fine, but it was also sentenced to jail. Not because he laundered money, but because he did not put enough safeguards around his business. So he didn't launder money, but it was alleged, at least, that some of the people who were doing the remittances through his platform were doing money laundering. You don't want to be involved in that. You want to focus on your business. Typically, the problem is you are thinking, oh, I've got to reduce costs, I've got to increase my bottom line, I've got to satisfy shareholders. But while you are doing that, you need to ensure that you are not leaving the back door open either for fraudsters. And from a customer intelligence perspective, you need to ensure that you are serving your customers very well, because customers are more demanding. Customers are also looking, they are digital savvy, especially if you are serving the young people, the Gen Z. You need to ensure that you leverage technology. What is the summary of what I'm saying today? Artificial intelligence, analytics is no longer a nice to have. It's got to be the game changer. It's got to be what you use to differentiate yourself. This is what we have been doing, and when you do it, you will be able to meet all your KPIs as an executive. Like I've said before, reduce costs, increase revenue, and serve new set of customers. Basically, that is what I'm here to tell you today. Digital transformation has got its positive, it's got its negative, but when you leverage artificial intelligence, machine learning, and analytics, you will come out safe. You will be safe, you will be free to do your core businesses while you are generating new revenue. If you think we can be of help to you, the same way we've helped over 400 banks and fintechs around the world, I've got my details to the organizers, and well, the slide was supposed to be used. They will still send it to you nonetheless. Thank you very much.
Thank you very much for the keynote presentation, Babalola Oladoku, Regional Manager, Sub-Saharan Africa at SARS. Now, ladies and gentlemen, it's time for the closing remarks, and I'd like to invite the Chairman, Board of Trustees, Fintech NGL, Dr. Segun Aino. A round of applause for him, please.
Good day, everyone. I'm sure it has been a very interesting opening session this morning. And I want to join the president of the association, Mr. Adebayo, to welcome all of you again and to say that we are looking forward to your active participation in this four-day event, which is aimed at moving the fintech space forward. The topic for discussion, the theme of the conference, Navigating the Next Normal, Sustainable Impacts in Fintech, is very, very apt because we have seen the development in the fintech space in Nigeria and in Africa, and of course, across the world, and how this is transforming societies, how this is creating impacts. So it's very important that we ensure that this is sustainable. And sustainability, is the name of the game now as we move ahead. How do we sustain the growth that we have seen? How do we ensure that we embed the kind of impact that we are seeing so that it can guide us for the future? And of course, we also need to now move from. We talk about collaboration as very essential in this business. We should move from business to business collaboration now to co-creating at triple at multiple levels, industry, government, academia, and also move to Koriba and also involve the community. By working together, this will help us to reach the kind of goals. And it's very instructive that as this conference is starting today in Abuja, the NIDA, that's the regulator for the information technology, something in Nigeria, NIDA, Nigerian Information Technology Development Agency. They are also holding a conference starting today till Thursday, and the subject matter is on digital transformation, a path to sustainable digital economy. Sustainability is featuring here. Sustainability is also featuring in Abuja. In fact, I will be participating in a session at 3 o'clock today, talking about how we can drive growth and unlock innovation through regulations for sustainable digital economy. Some of these things are related, and it shows that government itself, the regulators, the policymakers are now well attuned towards embracing technology, towards embracing digital transformation. So I hope that at this four-day event, we'll be able to harness all the opportunities that we have, we'll be able to exchange ideas, to build new friendship, new collaboration, so that by the time we are coming back next year, we'll look at where we are today, and we'll look at the path to the next normal. And we believe that the future is very, very bright, and we'll all be part of that future. So I want to thank you very much for being here today. The Fintech Association of Nigeria will continue to be the umbrella and the voice of fintech development, just as I've been doing since 2017. It has received a lot of support from the industry, but it has received a lot of support from the government and the regulators. I'm sure the president will have mentioned the regulators forum. That's a forum where regulators and innovators meet, and all the regulators that are present there: Central Bank, Fed, NDIC, NIDA, even EFCC, and so on and so forth. So, and this is due to the support that you have been giving over the years to the association. This is due to all the efforts you have been doing individually in your various organizations, and we hope and believe that these efforts will continue. We thank everyone that has been contributing to this, particularly organizations that have been sponsoring this event and contributing to the development and growth of fintech. And we believe that Nigeria fintech ecosystem will continue to lead Africa. And we are hoping that sometimes in the near future, the Nigeria fintech ecosystem will be competing with the best in the world. So thank you very much, everyone.
Thank you very much, Dr. Segun Aino. Ladies and gentlemen, we'll now take a break. This is an opportunity for you to visit the exhibition booth, visit the gaming center, play games, network, and visit the medical center, to just get some tests done at no cost. It's also an opportunity for you to get some lunch. So we'll take a break. I just want to remind everyone that as we take a break, this is an opportunity to meet new people. Who knows? Maybe business partners will emerge from this conference. Maybe you meet someone who will end up being a partner, an associate, or a client. Who knows what relationships can come out of conferences like this? So please, let's explore them. As we go on a break, make sure you meet at least one or two people that you have never met before and interact with them. Because when we come back, I'll ask us how many of us did that. Ladies and gentlemen, we break for lunch now and to tour the exhibition center. Please let's come back before 12:20 p.m. We reconvene before 12:20 p.m. Have a nice time viewing the exhibition booth and just looking around and networking. The conference continues before 12:20 p.m. Thank you very much.
It gives me great pleasure to represent Premier Oyiwo, my Managing Director and Chief Executive Officer of Nigerian Interbank Settlement System, NIPS. NIPS is a household name to so many of you, but the beauty of it today is when we are discussing fintech and NIPS is present, and you are given a title that talks about sustaining a legacy. How do we build a legacy? Should be the first point of discussion. Building a legacy requires collaboration without any form of cutthroat competition. It's built in an environment where people trust each other, where you believe that every operators in a system are interdependent. Nobody exists in a vacuum. And so for this reason, as far back as 1993, when we had as much as 189 banks in Nigeria, the MDs of those 189 banks came together, trusted each other, and said, enough of having to spend money in silos. Why should I continue to spend money interconnecting myself as maybe a UBA to Keystone Bank, to All State Trust Bank of those time, to Savannah Banks of those time, to First Bank and so on? Can we have a convergence of infrastructure? And so having a convergence of infrastructure now requires that the 189 of them that lock themselves up in a room are agreeing to cede their independence to one unit of association. And that unit of association now was more of a company that would be private sector led. Imagine what it takes for three people to agree on something. And now here you are with about 189 chief executives for banks saying that rather than me investing in infrastructures that will to empower financial system intermediation, we want to cede that independence to a company. At that point, I'm sure Mr. Shegwan, I know if he's still around, was an MD of a bank. And so that trust is something that gives someone like me a level of confidence that things can still be done better. Things have been done well in the past, but now, how do we ensure that the confidence that was built in those days, we are able to sustain it? And so if this came into existence in 1993-94, we started operation in June 1994, and then you are looking at institutions that you have to power. What do we have to do? The name Nigerian Interbank Settlement System comes from just one singular responsibility: facilitate settlement across the banking industry. But now, as
the system grows, as fintech comes into the mainstream of intermediation, can you even imagine at that point in time, they were looking for an MD of a bank who had a CBN background and has a degree in computer science. And it was very hard to source in 1993. And here we are. If you're looking for somebody that has an experience in regulatory framework of Nigeria, has been even an MD of a bank, you know how easy it will be for you to get that kind of an individual. But then, it was at a point at which we were beginning to domesticate computers, trying to domesticate computing when we relied on programmers as the drivers of even our IT department. But here we are today. Then don't forget the days of saying Visa card accepted here, MasterCard accepted here. And so if you have a MasterCard, you can't use it on a Visa device. If you have a Visa card or VAV card, you can't use it on a MasterCard device. And then, even at that point, where do people run to look for IT support? We didn't even have local competencies that could drive some of the initiatives we had for the banking industry or the financial system at those points. But here today, beyond the banking industry that NILS was established to serve them, we now have various and multiplicity of operators. Pension industry has been defined as part of financial system because ordinarily, the financial system is not all about banking. It's about insurance, it's about the capital market, it's about the pension industry. Not to not talk about the myriads of ancillary institutions that services this financial system. Who do we rely on, even in NIPS in 1994? NCR. That was a foreign company for that matter. But now we can comfortably say that as a company, we have local competencies that makes us rely on initiatives that are developed by locals. When we wanted to introduce the NCS, the Nigeria Central Switch, we were looking for ACI all over the world. But here we are, I can tell you that whatever you have in the NIPS Instant Pay is a locally developed API by our staff. And so most of the things we do in NIPS today rely on our people. And so if you want to even build legacies, what legacies do you currently have? We have legacies that must be built around people, processes, performances, and purpose. Did we clearly define the purpose for which fintech are needed? Yes, we've defined it that they are supposed to enable participation and fair conduct among the operators in the financial system. They are supposed to allow for responsiveness, promptness of activities, promptness of financial intermediation is what people want. People are tired or never even want the so-called a la carte meal. They want something they will get instantly. And so in terms of responsiveness, how has fintech assisted? Fintech and the competencies we have locally that doesn't even necessitate us running from pillar to pole, looking for competent hands to run our system, has introduced a lot of efficiency and effectiveness into our processes. We have more openness among even the operators. If there is a discussion that needed to be held in terms of growing the financial system today, it's not hard for you to bring the practitioners in the banking industries to the table. You bring practitioners in the pension industries to the table. Insurance will bring them to the table. Capital markets will bring them to the table because of the support that we are getting from the fintech that doesn't recognize the dichotomy of territories. And so it's important for us to equally know that in the course of even developing these competencies, we rely on the rule of law. Standards are set across regulatory framework. and the regulators are there to manage it. Today, you cannot talk of the financial system without talking about telecoms. Is the NCC up to its responsibilities? Yes. Because anytime there is even any form of divergence view between the banks and the telecommunication operators, NIST is able to bring everybody to the table to say we have to discuss, because one way or the other, we have realized that the capacity of the telecoms industry is needed to run the activities in the banking industry and the financial system as a whole. And what do we do? Is to innovate and continue to take challenges that the customers are bringing to the table for us to grow. And then, in terms of our planning has gone beyond short-term processes. We are looking at long-term processes because the generations that are coming after us are more impatient than us. And so, as much as possible, even as present managers of companies, fintech, financial system, and so on, everyone realizes that accountability and sound financial management becomes necessary. But the question we now need to ask ourselves is, have we really gained from fintech incursion into the financial system? We have. And it is not limited to fintech alone. Everybody is competing for the same fund that the fintech are trying to access. Today, you hear of e-commerce, you hear of e-health, you hear of logistics, you have of edtech, you hear of energy, you have of agri-tech and transportation. Have we, as fintech, been able to play a leading role, a trusted role for us to even be invited to come and take the funds that are available? Statistics are there to tell us that in the year 2021, over 1,038,456,500 US dollars came into Africa in terms of funding startups that has to do with fintech. Out of it, the Nigerian economy got 536 million of the 1.038 billion, representing 59.4% of the funding that comes to startups to drive businesses, to drive startups. And the question again is, even while bringing the money in, you've assured the investors that this is what I'm going to use this fund for. Have we been able to have the desired social impact? We can comfortably tell us today that the number of people that were employed in 2021 by fintech was close to 20,000, 17,915 to be precise, while the employees that can be traced to even startups that sought funds, the ones that sought funds that had to make a declaration that this is the social impact of the fund I got from you, is more providing employment for 17,915 workforce in Africa. Did Nigeria actually make the necessary impact? Nigeria was able to employ 5,446 additional workforce by these fintechs that sourced for funds and got it. In that respect, it becomes necessary for us to realize that fintech is not only the bride everybody is running after. Everybody has some other sources, like I mentioned, of e-commerce, e-health, energy, transportation. Move is there in Nigeria today. Who do we rely on? Before Move came into Nigeria, we were relying on Uber. But now, with the incursion and the engendering of confidence in foreign investors, we are able to get investors to come into the fintech space and invest. Flutterwave, for instance, then if we now come to company level, we now begin to look at across Africa, who are the individuals, who are the companies that are able to get funding from foreign donors. Flutterwave from Nigeria, for instance, got $170 million US. That is a fintech We have MTN Alan, an Egyptian company that got 120 million in 2021 alone. We have Trade Depot, a Nigerian retail tech company that got 110 million. And that dovetails down even to Daystar Power. That is an energy driving company that equally got a sum of 62 million. What does that tell us? That we are daily gaining. We are gaining, we are making the desired impact in terms of ensuring that fintech contributes significantly to growth and is able to power innovation and economic growth. But the question that remains in the top of our mind today is, has this funding been growing? Yes, we have a table that shows that in 2015, we were only able to get 185 million US dollars. But by 2021, we were able to get, Africa was able to get as much as 2,148,517,500 US dollars. Meaning that from 185 million, we have been able to cross the threshold of 2 point something billion. Do we have the potential to sustain this? Which is the question that is the keynote address is addressing today. If we have been able to build confidence over the period, and we've made foreign donors and even loan disbursing institutions to trust us that will use whatever fund is given to fintech effectively, it will make the desired impact. How do we sustain this legacy? We need to still build confidence across the various operators in the financial system. Today, you see that even the CBN is licensing more and more players in the financial system. 5 years ago, we still had the discount houses playing dominant role. With mergers, acquisitions, and so on, discount houses are moving into merchant banking. But today, again, 3 years ago, we never had anything called payment service banks. But today we have 5 licensed payment service banks. What does that tell us? Majority of these ones, Money Master, for instance, is powered by Glo. 9PSB is powered by 9Mobile. Hope PSB, UPSL here. And then we have Smart Cash by Airtel and Momo by MTN. Do we trust ourselves? Now, that means the financial system and the telecom sector. Whatever we have been telling the telecommunications sector in the years past, that there is need for us to ensure efficiency and low-cost processing of transactions. Will it not become more glaring to the PSBs now and even their promoters that we are not just fighting for low-cost service delivery, but because as we grow the latitude of operations of the financial system and exposures, we all need to do it at reduced cost. While doing it at reduced cost, efficiency that is desired from each of the players must be ensured and assured. And that is why this comes as an appeal, even from NIPS as standard setter for the payment system, that we need to still look at the people, process, purpose of the fintech more and more for the financial system, and ensure that we have greater and improved accessibility of the services the financial system offers to the hinterland. We've done enough in the metropolitan cities. How do we penetrate into the hinterland? That is a mission that we must set to do. And it requires trust. It requires cooperation. The days of saying, I'm competing with this person is gone. Institutions today collaborate, cooperate to ensure that service is delivered to the last mile customer. At what pace are we responding to the needs of the market? As much as it is necessary, we need to ensure that infrastructure optimization is equally put as a top burner. It's not just enough for us to say we have infrastructure. I build my own in silos, this one builds its own in silos, and so on. If there is no convergence, there is no way the desired impact of fintech inclusion and inclusion. Because I believe strongly that even while talking about financial inclusion, we should equally be talking about fintech inclusion in our processes. Fintech inclusion in our processes, because you cannot do anything that will make you meet the needs of the market as fast as desirable if we don't build that bridge of trust between the licensed institutions and these fintech companies. And the CBN has been magnanimous enough to ensure that licenses are not only given to banks. Fintechs are beginning to be the owners of MMOs. They are beginning to be the owners of microfinance banks. A lot of them, at one point or the other, will own banks of their own. We saw what happened the Polaris during the week, for instance. Was it acquired by a multinational? Behind this are some fintech initiatives that feels that, okay, the thing, what is needed now to drive the operation of this bank is for us to introduce technology into whatever is being done. And don't close your mind to the fact that opportunities only exist with the currently licensed institutions. We have about 3 banks that have been recently licensed by the CBN. You think they want to do brick and mortar banking? No. Everybody wants to adapt technology to deliver services to the last mile customer. But for fintech, we need to address the challenge of locating you. Even while you are driving financial inclusion, driving financial intermediation, where can I locate you? You don't only exist in the cloud. While seeking your licensing, you gave a locational address and you gave some operations and operating location. If we get there, will we find you? Let's sustain our confidence in each other. Let's sustain trust. Let's build bridges of collaboration in such a way that when the roll call comes, we'll continue to engender confidence of the public we are serving and the investors that want to pool resources for us to make the desired impact in the financial intermediary role that fintech are driving. And above all, it is not the funds that the fintech are sourcing today is not only for you. Other competing needs are emerging that are competing for this same fund, but be accountable, be accessible, and work more with as many partners as possible that are in the system to grow the economy of Africa, nations of the world, in particular. Thank you.
Thank you very much, sir. Ladies and gentlemen, we're now moving on to product pitches. Now, different companies are going to be pitching their products. So I would urge you to please sit back, relax, and enjoy the pitch. We're starting with YVOS. It's a one-stop platform for KYC, AML, address verification, legal tech by You Verify. Please let's welcome YVOS for their pitch. The timer is right at the back, so you can please look to the timer so that you work with time. Thank you very much.
Okay. Thank you. Hi, everyone. My name is Akeem Akiode. I'm the head of growth and marketing at eVerify. And today we want to show you what it looks like to perform KYC, AML, and all other compliance needs that are mandated by law for you as a company to perform. Not to waste time, we're going to be showing you live data from our product at UVerify. We call it the UVerify operating system, the YVOS. And with this product, you can perform all of your KYC checks. Now, just to mention, everything that you see displayed on the screen today can be manually verified, and you can also choose to integrate your platform with us using APIs and SDKs. Can we display the product now? Okay, so today I'm going to be doing a summary of what it looks like to perform identity address and address verification using all the popular IDs in Nigeria, your NIN, your BVN, your international passport, driver's license. And perhaps a lot of people do not know, but you can even perform checks using registered mobile numbers. So with a person's mobile number, you can get their NIN, and if you wish, you can do advanced checks from there. Also, we're going to be demoing what we call the global company search, which allows you to verify any company all across the world. This search will return to you the details of the shareholders of that company, and will also let you know who the ultimate beneficial owner of that company is. Okay, so let's get started with identity verification. We'll start with the BVN. Can we have a live BVN data, please? So just like every other KYC verification that you must perform as a company, it is mandated that you get consent from your customers. Consent is the very first step. So after inputting the details, the person's BVN number, first name and last name, you must always check that you have consent from the customer before you go ahead to run your verification. And that's the field where you input the date of birth. And finally, the consent form, and you click on verify. Now, as you can see, the BVN was found, and the system is returning data from the government database, right? You have all the details from that person's BVN registration. Now, for fintech banks or anyone who wants to verify BVN, you can always cross-reference this against the details that the customer provides to you, and that way you can confirm their identity, that they are who they truly say they are. Next up, let's verify the NIN. So here you put the NIN number that is provided to you by the customer. And then you provide their name, first name, last name. And then the date of birth. And as always, you check that you have consent, then you click on verify. Once again, the NIN is found, and it returns all the details, all the personal details of this person, from the name down to local government of origin, down to their nationality, and even a copy of their signature on the government database, right? So if someone else claims to be this person, for instance, and they provide you a signature that is wrong, you can see from this data that that person is an impersonator, and it helps you like really confirm people's identities. Finally, let's do the mobile number. Let's do the mobile number. Okay, this is the company check. Now, this product is what allows you to verify that companies are actual legal entities that they claim to be. And this particular feature allows you to verify any company all over the world, be it in Africa or in Europe or in the Americas. So right now, we're going to verify a company in South Africa, right, using their registration number. So this is our company, by the way, right? But as I mentioned, this is a live verification. This is not test, right? So everything that you're seeing right now is being verified right on the spot. And so, as you can see, once again, the company details is found, name is verified, you can see the VAT number, you can see the company registration number. Can you scroll down a little bit? And of course, you can see the address of the company's registration in South Africa, Pretoria precisely. So these are some of the data that you can get when you verify companies on the YVOS. What this helps you do really is that it helps you know who exactly you're doing business with. Today any business can claim to be anything, and anybody can claim to be an owner in a business, right? But when you run verifications, you know who exactly owns the business, and by extension, who is the major beneficiary of whatever deal that you're cutting with such businesses. Finally, let's run the anti-money laundering check. This is done by cross-referencing the information against the global anti-money laundering blacklist, right? So we're going to do a very popular figure, and we're also going to do another popular figure, right? So the first person we're going to be running through this check is Bola Ahmed Tinubu. That's quite popular, right? Last name is Tinubu, middle name Ahmed. So as always, you must always confirm that you have consent, and then there it is. So this result is not red, and what it means is that this person is not on any anti-money laundering list. However, the report is also showing you that this person is politically exposed, right? So once again, what this does is that it helps you really know the status of the person you're trying to do business with. So while this person is not on any money laundering list, this person is politically exposed. So if that will affect your business relationship, it helps you make that decision ultimately. Let's run a neutral person through this list. So the person we're running through this check right now is Mr. Shion Folorunshaw of the Nigerian Fintech Association. And as you can see, the result for this is green, which means this person is neither on any money laundering list, nor is he politically exposed, right? So naturally, this also helps you make a decision. Now, I have to mention that as a company, we do not provide any of this data to regulators, right? It's business between us and your company. So you ask us to verify, we return the data back to you, you decide whatever you want to use that data for. The only situation where we are forced to provide this data to regulators is perhaps in court cases, and if we're mandated to do so by law. And finally, I would like to talk about our address verification service, but we will not be demoing this because of time. We're now in the red zone. What our address verification product helps you do is that it helps you verify the address of your potential customers or businesses within the country and all across Africa. So as you all know that in Africa, we have a little bit of an addressing problem, right? And even Google Maps is struggling to adapt to our addressing system every day. One day your ride is 5 minutes, the next day is 30 minutes. What we have done as a company over the years is really build a solid technology that is backed by human resources to verify the location of anyone all over the country, right? So we have representatives in all 32 states of Nigeria, and we also have a superior technology that allows for geotagging, right? So this way, we verify the addresses of your potential customers, potential businesses, staff guarantors, or perhaps even your staff, right? So not only can you confirm that your customer lives somewhere, you can confirm that their guarantors work or live where they say they do, and you can also confirm the addresses of your potential business partners. I would like to go on and on, but sadly we've exhausted our time. Thank you so much for your attention, and if you have any questions, we'll be right here to answer. Thank you very much.
Thank you very much. Now to the next pitch. We've got Bugatti, end-to-end expense management platform enterprise solution by Bugatti Limited. A round of applause for Bugatti as they come forward for the 10 minutes pitch. Again, the timer is at the back, and I believe the time starts in a bit.
Can you hear me? All right. Hello, everyone. Good afternoon. My name is Kokwala Tolulokwe, and I'm the Business Development Manager of Bugatti Limited. All right, Bugatti, of course, is a budgeting and expense management platform. It's a solution that helps finance teams in different companies to manage their expenses. I mean, isn't it very funny and amazing how at this age, a lot of companies, a lot of finance teams still get to use the manual processes, to manage their expenses. I mean, this is not sustainable. I know you agree with me, right? It is not very sustainable and it is not very optimal. A lot of finance teams in different companies still get to have a lot of things very manually. You would see that if you check your finance teams very carefully, you still use manual processes, you see that your finance teams are very tired, they might be very hungry, they are always very frustrated, all because the way they manage the spendings of the companies, the expenses of the companies, the budget of the company is still very manual. Please play the video. All right. All right, thank you very much. I mean, I was trying to say that a lot of companies today still use spreadsheets, manual expense reports, manual processes, and these are the problems. These are problems, next slide please. These are problems because a lot of people, a lot of companies, a lot of finance teams are still very stuck in this very particular manual process. And when there are problems, there are definitely consequences. The consequences that comes with these kinds of problems, and when I say problem, I mean manual processes of expenses, is number one, you are not able to have, quick visibility and a very robust visibility on how money is being spent in your company. You get to find out that people spend money and you are not able to have, a robust approval process because people spend money at their will. I mean, you do a budget or you do some kinds of expenses and people are meant to spend on this budget and expenses as the case may be. And when they go out of the office, they get to spend anyhow they spend and they come back with, some people come back with fake receipts and the likes. But this is not the case when you are with budgeting. Next slide, please. All right, like I said, one of the very consequences that comes with manual management of your expenses is number one, lack of visibility. You will see that companies at the end of every year, week on week, month on month, they try to forecast for the next year because they do not have, they don't have that vastness of visibility on how they spend their money for the year, all right? And this is what budgeting can help you with. Of course, hazardous cash management, because, how can you say you want to track your expenses when there's no tool to support you? And again, there are a lot of risks, there are a lot of human errors, data entry errors, fraud, compliance issues as you would have it. And you don't have control because you're not able to set policy when it's manual. I mean, you can't set a policy on a particular spend because it's manual. When people go out, like I said, they don't have any policy that they want to key onto, they just spend as they like. And of course, you will not be able to approve a particular payment except for the fact that you signed the paper. And anybody can just spend anyhow they want to spend it. Of course, definitely, because of this kind of processes, you're wasting time, you're wasting money, you're not productive. Next slide. Now, what we are bringing to you today and what we're trying to tell everyone here is that we've come with a solution, which is Bujeti. Next slide, please. And with Bujeti, we have a lot of product suites, right? First of all, you are able to manage your budget and expenses. You are able to create customized budgets. You are able to keep an eye on your budget in real time. And you are able to keep control of every money that you spend every time. And another thing that is very important on Bujeti is that you can pay instantly. You know, a lot of people use ERPs, right? But from ERPs, you cannot make payments. But on Bujeti, you can make your payments just on Bujeti. You are able to issue cards for your employees or beneficiaries for them to be able to spend per time, and you are seeing how they spend the money, and you are able to also, of course, do instant transfers, and the cards can be virtual or physical, I mean, depending on your use case, and definitely you are able to customize spend policies. Another thing that is very important for us that we have on our solution is the fact that your employees, when they have gone to spend some money and perhaps the budget that they were on, they have overshot that budget, they are able to hack and request for reimbursement. And when they request for that reimbursement, you are liable to approve or decline it at that particular point in time. So it's not that they are spending money how they want to spend it, but they are getting approval from you because they've overspent, and then you know why they need more money, and then you are giving them more money. Definitely, you can digitize that, you can automate that, and of course, you can customize your approvals. Another thing which is quite important for a lot of us, especially in the fintech industry and SMBs, is the fact that you need reports, you need insights on everything that you do. I mean, if you don't have insights, if you don't have reports on how your money is being spent, how then do you want to know how to spend the next time? So on our platform, you get real-time insights, you have automated periodic reports, and very interestingly, the ERPs, the accounting tools that you use today, you have the opportunity to also integrate it with Bujeti. Next slide. Very interestingly, on our platform, you are able to, spend multi-currency. It means that you're not just limited to Naira. You can do USD, you can do Naira, because we know that you have vendors that are not Nigerian, Nigerian vendors. And definitely different companies, different approval flows, different approval levels. You can also customize your approval levels on our platform. Another thing that you can do is definitely you can manage your vendors, you can manage your teams, you can manage your expense heads, categories as you'd have it. Meaning that on our platform, if you want to spend money or send money to a particular vendor, you can create that vendor. And so you as the manager or you as a team head or the finance person, you know what vendor is receiving what money at what time. You know what team member is receiving what money at what time. You know what category of payment this payment is being made of. So I know that a lot of people have, you have your tools that you use today, but what Bujeti is bringing to us today is the fact that on that particular platform, on our platform, you are able to pay and consolidate everything about your expenses on our platform. You don't need to go on another platform to pay. You don't need to go on another platform to budget. You don't need to go on another platform to track. You can do all of those things on our platform. You can generate your reports, like I said. You can export reports, do a lot of things you want to do on the reports as you have it. I mean, you can do so much more on our platform. We're calling you today to be a part of us. How can you be a part of us? Of course, you can just visit bujeti.com to get started. How do you get started? You can book for a demo with us. We're very happy to have you and book a demo with you. We can show you everything that we've built, on our platform. Interestingly, we're currently running our beta, and we're calling a lot of you people to come and, be our exclusive users for free. So you come on our platform, use our platform, check what we've been able to build for the past couple of months, and we'll be glad to have you. Thank you very much for this wonderful time. Thank you.
Thank you very much. Please, a round of applause for Bujeti. I believe they pitched in less than 10 minutes. So they gave us the time and just said, we dash it to you. Thank you so much. We appreciate it. Now we're moving on to a master class on environment, social governance, and risk management for the fintech ecosystem. And we begin with fintech and governance. And I'm honored to invite Ayodele Adeyemi Faboya, a partner at Banwo and Igodalo, to please come up for the presentation. A round of applause, please, ladies and gentlemen.
Okay, good afternoon, everyone. I'll actually be speaking on fintech and risk management, not fintech and governance. I've been told I have 10 minutes, and I have the dubious honor of speaking first, so that means I have to actually keep to time. So there'll be no banter. We're just going to go straight into the learning. Seun, I hope you have not started my time. Okay, I'll start talking, but don't start counting because my slides are not up. So I'll be talking today generally about the effects of bad risk management practicing. Sorry, Sean, please help me. Okay. So I'll be talking about the effects of bad risk management practices first, and then hopefully, if I have scared you enough to pay attention to the rest of what I have to say, I will then go into the categories of the risks in the fintech ecosystem, and then we'll talk about steps to good risk management practices, and then conclude hopefully within the 10 minutes. So going into Ash point is here. Not working. Okay. You guys have to add more time. Your clicker is not working. So, effects of bad risk management practices, the obvious ones, regulatory sanction. You could lose your license. You could be fined. You could lose profits. There's reputational damage. We're in social media era. I mean, everybody knows one viral scandal, and that could be the end of it. And I don't need to tell anybody here that customers, they are fickle. They will leave you quick because the competition is fierce. So you could lose almost everything with reputational damage. And then there's loss of shareholder funds, which means that you don't just lose profit, but you're at risk of losing capital as well. And then, of course, the risk of lawsuits. But it's not just that. It could be a lot worse, right? This headline right here is a real headline. And if you look at the date, it's quite recent. Those that are familiar with this case would remember that these gentlemen were not accused of fraud. They didn't do anything. There was no sharp practice. What happened was that there was no fintech, there was no risk management. There was no compliance risk management. There was no operational risk management. And that led to this. Now, there are people here that will say, well, I have nothing to do with America. My business is in Nigeria, and I'm not an American citizen. But guess what? Even the CBN admin sanctions regime contains imprisonment as one of the punishments for some of the breaches in that regulation. So guess what? If it be you. But that's why we are here today, to make sure that it is not you. So going quickly, if I have your attention now into categories of risk. I'll start with compliance and regulatory risk. Now, first one I'll talk report. Let them show you all the obligations that you are subject to right from the beginning. And then ongoing, ensure that you subscribe to a regulatory watch service so that you're up to date. Now, it might cost you money in the beginning, but guess what? It could save you hundreds of thousands of dollars going down the line. So, and then looking at AML CFT, I mean, I don't have to talk too much about this. Everybody is aware of AML CFT regulations. The one thing I want to mention is that it's now strict compliance. You can't afford to go half measures. So there's strict compliance now when it comes to AML CFT. And you have to make sure that it's not even just local legislation. A lot of times, stakeholders look for higher standards nowadays. So that's one thing to note. And then we're looking at KYC as well. Thank God for You Verify. They've made KYC easy. And You Verify, I'll collect my commission afterwards, right? They've made KYC easy. So what's your excuse? People will often say that fintech is supposed to be nimble, it's supposed to be quick and easy. KYC slows the process down. But I will advise you, never ever sacrifice your KYC on the altar of nimbleness. It will come back and it will bite you. And then also data protection and privacy. Many people are familiar with NDPR, you're familiar with GDPR, you know that there are data protection requirements. Many people are also familiar with the fact that, yes, I can't just transfer data abroad, I can't store data abroad, there are restrictions. But there's less focus on things like data retention. How long do you keep customer data, even when they are no longer active? What's the state in which you keep the customer data? Do you anonymize it, for instance? Or do you just leave it with all the personal identifying factors? And for how long? What's the regulation in the jurisdictions in which you're operating? And this is not just the jurisdiction in which you are incorporated, but the jurisdictions in which you operate, in which you collect data from. What's the regulation, for instance, in relation to retention and anonymization? This is why you need an expert. You need to be aware of these things. Otherwise, the risk might come and bite you. And then things like big data. We have data, right? And we all know the value of big data. You can use it, you can mine it, you can get customer-focused information from this data. You can use it to customize your data, risk assessment and management. Oh, how wonderful. But in the jurisdictions in which you operate, are you allowed to use big data in this way? What are the implications? For instance, the EU is looking at big data controllers and is looking at them and saying, look, we need to put more focus on these guys in relation to antitrust issues, in relation to market share. So when you are using big data in certain jurisdictions, you have to be aware of the implications of this big data that you're using. It's not just a case of, oh, I have data and I'm using it. And then we move to operational risk. So day-to-day operational risk is actually where a lot of people miss this thing. You have things like technology risk, yes. Cyber threats, cyber security, everybody is aware of that. But what about your licensing? Do you actually have the license that allows you to exploit the technology? Many people don't pay attention to things like assignment agreements, licensing agreements. You're using templates. You're getting your neighbor to look at it for you because your neighbor wears a wig and gown. Technology is the bedrock of fintech. And if the technology is the bedrock of fintech, you owe it to yourself and your company to ensure that that technology is actually right. You actually have the right authorizations and the right powers to exploit that technology. And then things like third-party risk. Typically, this will come in form of customers or come in form of partners. And this usually we would mitigate with KYC, we would mitigate contractually. You Verify has spoken about KYC. Do you know your guy? Do you know this partner? Are they on the sanctions list? Will you be guilty by association? Those are things that you need to think about. And then contractually, what is your liability allocation? You're going into a partnership to deliver a product. What is the liability allocation? What is the liability limitation? Those are important things to look at in contracts. And then that's more important when you look at things like robo-advisory, when you look at things like your smart contracts, like the fact that people are outsourcing core banking to the cloud. Those kind of things become more important when you then think of the fact that there are multi-jurisdictional components in these things. And so it's important to really understand, for instance, the statutory liability allocation framework when you are going into this thing so that you don't end up carrying the bag of risk. And then, of course, enforcement. Many of us use smart contracts. The customers love it. Click a button and it's done. But smart contracts are actually not enforceable in every jurisdiction. And this is something that one should consider. And then intellectual property. Is it registered? Do you have your appropriate protection language? And then my favorite one, corporate organizational risk. And this is something that applies to a lot of startups. in a rush to just move forward, develop, and start and get into the market, many people fail to address strategic risks at inception. So, do you have the right corporate structure? Simple things like, do you have a shareholders agreement? Do you have director contracts? Are your supply chain agreements in place? It's quite disheartening, the number of fintechs that we see that are stuck and cannot scale because of disputes that could have been avoided by a very simple contract. And then strategic risk. I mean, that's the more quiet one, the slow poison. Strategic risk essentially involves future risk management by contingency planning. So, what is your business continuity plan, for instance? And I've just set out here, I mean, I've spoken about mitigation as I've spoken, right? But I've set out here some of the other mitigation strategies. So, your business continuity plan, you need forward thinking structuring, you need to have inbuilt flexibility in your structuring. Of course, hire an expert, hire a lawyer. Subscribe to regulatory watch services. Change control processes are very important. Many people don't pay attention to them. And then, of course, your regulatory obligations must be inbuilt into your contracts. Don't separate your contracts from regulatory framework, right? It's one and all. And then, of course, operational risk. You need to ensure that you have good risk management software or a good risk management manager at the very least. And then engage in real-time suspicious activity monitoring. I mean, we had a client come to us and, of course, the partner refused to take bare liability because what should have been reported 6 months ago was only just being discovered down the line, and they had the obligation to monitor and to report. So you can avoid massive fraud if you just monitor and report. And then, of course, corporate governance, which Joseph will speak about, and then liability insurance. Professional liability insurance is important. I mean, that's something that many people don't think about. And then, of course, I have set out some of the applicable laws in Nigeria. There are many of them, and there are many that are not in Nigeria, but are also applicable. You can't see them, they are very tiny, but don't worry, your lawyers know them. This is another reason why you need a lawyer, because otherwise you have to think about all of these laws. Okay, so to conclude, I think I'm 1 minute over. I've said that risk management framework requires implementing structured policies. That's the first step. You have to articulate your risk appetite. You have to establish strong internal controls. Honestly, risk management it's from inside. It starts from like Aaron's, how do they say it in the Bible? The oil from Aaron's beard, it flows down. So it starts from the board. It starts from senior management. They set the tone, and then it flows down. And then, of course, you must ensure that you have risk assessments and you have adequate oversight. Board oversight of risk management is key. If you don't have a risk management committee and things don't come to the board, then you are setting yourself up for failure in the future. And then the regulators are here, so I'll say this. Regulators also have a role to play. Fintech risk will ultimately become systemic risk because of the role that fintechs have started to play in the financial system. And so regulators also have a duty to reconstruct their own systematic financial risk prevention and control methods. And the only way they can do this is to understand the fintechs. How do you do this? We look at things like sandboxes. So the regulators also have a duty to ensure that they're helping to ensure there's proper risk management in fintech. Thank you very much. I wasn't really over time.
Thank you. Thank you very much. Ayodele Adeyemi Faboya. She spoke about fintech and risk management. And now to fintech and governance. Ladies and gentlemen, join me as I invite Joseph Emunjeze, a partner at Udo Doma and Belu Osage. A round of applause for him, please.
Okay. Good afternoon, everyone. Ayodele had just spoken about risk management in fintech. I'm here to speak in relation to governance in fintech specifically. I think before we talk about fintech and governance, what we need to understand is why is governance relevant in the context of fintechs? Fintechs essentially are institutions that mostly engage in financial intermediation and in some cases engage in financial transactions on their own, like deposit taking and the like, if for the MFBs that are fintech. Now, why is governance important? For you to understand why it is important in the context of Nigeria, you have to look at where the Nigerian banking sector came from. Some of you may recollect in the 1990s when we have the Failed Bank Tribunal that has to deal with various banks at that time that had various issues, most of them that arose from governance-related issues. The keynote speaker talked about 189 banks that we have in Nigeria in the 90s. And that 189 banks, a majority of them failed because in addition to risk management issues, they also have corporate governance issues. You have a bank where you have the husband, the wife, and the children who are the chairman, the MD, and the directors. So it is as a result of that led to the adoption of corporate governance code in Nigeria. The first was by the central bank, which happened post-consolidation, where the central bank had to come up with a code that codified at certain things that would apply in relation to banks and discount houses. But to understand why governance is important, the first thing we need to know has to do with the issue of conflict of interest. An essential element in governance is how to address the issue of conflict of interest among the managers of companies. Under the Companies Act, the first responsibility of a director is to ensure that the responsibilities of being a director do not conflict with his duties to the company. Now, what does that mean? A director is not permitted to have secret benefit from the activities of the company. Now, if a director knows that a particular transaction a company is going to go into is going to conflict, is going to have personal benefit from that contract, that director is required to disclose that fact to the company. And the company is to ensure that in voting on that matter and deliberation on that matter at the board meeting, that particular director does not take part in decisions on that issue. Now, where a director fails to discharge that duty effectively and have gone ahead to make secret profit in relation to a transaction, the profit made belongs to the company. It's required to be disclosed to the company. The only where a director will not be liable is where the director have disclosed the transaction to the other directors and the other director have gone ahead, taken a vote, and agreed to go ahead with that transaction, notwithstanding that a particular director has interest in that transaction. Now, how does that relate to fintech? Fintech in Nigeria are essentially mostly regulated by the central bank, where you have a few that are not regulated by the central bank. Now, what have the central bank done? The central bank has come up with various regulations that have set out the governance requirements that apply to fintech. Those requirements include board composition, meetings, shareholding, who can be a shareholder, who can be directors, what are the responsibilities of directors. For instance, if as a fintech, you're in a microfinance bank or a finance company, the central bank requires you to have a majority of non-executive directors more than executive directors. And then you also ensure that you have what they call an independent non-executive directors. Then there's also a separation between the role of the chairman and the MD CEO of any of the CBN regulated entity. So unlike in the past, where you could have the chairman as being the CEO of a company, which happened in some banks in the past, that is no longer permitted. One key thing to know in relation to microfinance bank is that in relation to unit microfinance bank, because of the nature of that institution, the central bank requires that a unit microfinance bank should have only one executive director, and every other director will be non-executive directors plus one independent non-executive director. And the CBN Code of Corporate Governance that applies to microfinance bank is also similar to the codes that apply to finance companies. And there are other codes that apply generally to the other sectors that are regulated by the central bank. Another key thing to also note is that we have the Nigerian Code of Corporate Governance, 2018, that applies to public companies, private companies that are regulated by other institutions, and then also holding companies of other companies in Nigeria. Now, this National Code of Corporate Governance also applies to CBN-regulated institutions. But when you look through the various codes, you will see that there is a convergence between the requirement of the national code and those of the central bank. There are only little areas of conflict. But for most fintechs that are regulated by the central bank, the key requirements for them that you have to comply with the requirements of the central bank. Now, in relation to the National Code of Corporate Governance, if you are a fintech that's not regulated by the central bank, and also you do not come within the regulatory purview of the National Code of Corporate Governance, and then you take the view that, oh, I don't have to comply with any Code of Corporate Governance requirement. There are benefits that will accrue to an institution that the governance structure is appropriate and it's robust enough to ensure that institution run effectively. I have instances where we have had to be involved in transactions between foreign institutions and companies in Nigeria, where those transactions simply could not proceed. Reason being that you have the foreign investor didn't have confidence in the fact that those companies were not strong in corporate governance ethics. So as a result, those deals most often are not fair, will fall through. And where in some cases, a deal that could take 6 months, 7 months, could take 2-3 years to complete, because the investor is trying to ensure that the corporate governance requirement of this institution is restructured and ensure that it complies with what is required. For institutions that are regulated, the key requirement is that they have to comply with the requirements of the various codes before they are licensed, so they don't have major issues. Most of the fintech who are into lending that are operating with money lender license, they do not come with they are not required to comply with the codes of the central bank. And also, most of them will not come within the National Code of Corporate Governance. But it is advisable as an institution who is hopefully be looking for investors who want to ensure sustainability of that business, who wants to ensure that that system runs transparently and the risk management is risk issues are minimized. It is important for that fintech to adopt either the requirement of the central bank code as a form of self-induced obligations, or comply with the requirements of the National Code of Corporate Governance. While doing that, that will ensure that that fintech institution has trust and confidence of investors, is able to have employees' loyalty, because employees will see that this company is properly run, properly governed, and will ensure that I have loyalty to the company, and if anything happens, the company will remain a going concern. It's not the case that when you have an institution and the brain behind it is no more, and that institution ceases to exist. So these are some of the key requirements for Code of Corporate Governance, and also the reason why it is essential that institutions ensure that they institute sufficient Code of Corporate Governance in relation to their operations. It is not just to comply with requirements or regulations. It is also a way to ensure that that institution is efficiently run, efficiently managed, and that power is not concentrated in a single individual or a few individuals. And that there's a reporting line that everybody knows that if if a particular person is not around, there are others who are within the system that are able to operate the system, and the system will run efficiently in a manner that addresses the interest of all the stakeholders that are involved in that particular institutions. Thank you.
Thank you very much, Joseph. Now we're moving on to the next one, and it's focused on fintech and social impact. And I'd like to invite Dayo Ademola, CEO, Branch International, to please step forward and speak on fintech and social impact. A round of applause for Dayo, please. Thank you.
Okay, cool. Good morning, my bad. Good afternoon, everyone. My name is Dayo Ademola. I'm the Nigeria and West Africa MD for Branch International. Branch is a full-service digital bank, so we offer loans, investments, debit cards, and all of that. And I'm here basically to talk a little bit about fintech and social impact, and I'll make it quite quick. Excuse me. So how I've structured this is just to ask ourselves three main questions around this topic, and basically end up with what it is that I think we should be doing as an industry to have more social impact as fintechs. So question number one, what's the current state of play? Not news to anyone, but globally, fintechs have been able to command the largest share of venture capital investments in startups and in going concerns. And we're largely able to do this because fintech, I think, is one industry that can strike the double good of doing well and doing good, which means you can offer your investors also offer your investors great returns on their investments, but you can also have a positive impact on the societies that you're operating in, because fintech by its nature gives you the potential to operate at scale. So just a quick data point. In 2021, Africa and Africa-focused fintechs commanded about 62% of venture funds that were invested, right? And that came up to about $3.2 billion. Still small, is a drop in the bucket of the total amount that was invested globally, but in the scale of what's happening on the continent right now, that's 62% out of all industries, right? So you're thinking health tech, and everything else that is out there. Fintech took in 62% of this. And a good proportion of that is development and impact funds. Because again, referring to my first point, fintech is one industry that gives the opportunity of great returns as well as having a positive impact on the societies in which we operate. And the way firms design, manufacture, distribute, and sell products and sell their products also impact not just the bottom line, but society as a whole. Okay, there's a bit of a lag. Yeah, this clicker is making me look bad. Okay. So my next question is, have fintechs had a significant impact on Nigeria? I think the resounding answer to that is yes. A good data point, between 2016 and 2020, looking at the Athena Access to Finance survey, there was a 13% of increase in Nigerians using just payments, and this was almost 100% driven by DFS and fintech, meaning that payment solutions are getting closer to the Nigerian user simply because they're able to use their phones, be they smartphones or non-smartphones, because there are all kinds of services that fintechs and other digital financial services have made available to people. We also saw an increase of the banked population from 38% to 45%, which was a jump of 36.5 million people to almost 48 million people within that time frame. And again, that again is largely attributable to DFS, digital financial services, and fintech. So are we having an impact? Yes, absolutely. Speaking about firms specifically like Branch, firms like us have an impact not just in financial sector widening, but particularly in financial sector deepening. Because while you have almost half of the adult population in Nigeria is banked, a good portion of them have one single product, which is the savings account. Some of them also have a debit card, for example, but a very, very tiny majority of those people have access to credit, which is the most underutilized financial service in Nigeria. So what institutions and firms like Branch are able to do is that if you're already banked, i.e. you have a BVN, you have a savings account or whatever it is, we're able to extend credit to a large group of users that traditional banking in Nigeria is not able to do. I have a data point there that says we've accessed about 4.5 million Nigerians. I was just corrected an hour ago that it's actually 5.2 million since being in Nigeria coming into Nigeria in 2017. So I think, again, back to my original question, have we had a significant impact in Nigeria? The resounding answer is yes. Let's see if I can move down one slide. All right, so given those two things, here's the larger question. What more could we be doing and should we be doing? The first thing I think is doing a better job of setting and measuring specific impact goals. So a lot of times with fintechs, you'll see big impact goals in our mission statements, in our objectives, but a lot of the time that doesn't actually trickle down to goals that we are tracking and tracking key results against. They're just big statements that we make and then we face the business of doing business rather than also making an impact. And one way to change that is to align impact goals with revenue goals. So in whatever model that you have built as a fintech, that is a revenue model, that is a profit model, you can actually layer impact goals on top of that. So if your target is to reach X amount of users, you can layer on top of that a certain percentage of those users should come from a certain underserved section of the country, for example. That's just a single example. So there are many ways in which you can layer impact on top of doing well as an organization. I'm not a big believer in sort of 100% charity work because I personally think that is unsustainable. But if you're able to layer impact on top of good business, that is where you have the largest successes. And again, where there's room, experiment, right? So us as operators spend a lot of time, we're very profit driven. We have investors who have put their cash and their faith in us, and we have to spend a lot of time getting returns for them. But you get to a certain position where there's room in your bottom line for you to experiment a little bit. So dedicate some of your brain trust and some of your profit margin to experimenting. What else can we be doing to reach more people and to have a deeper impact with people? And truly, at the end of the day, you'll see that this largely has a positive impact because if you're taking time to experiment, then you're going to find nuggets in there that actually add to your bottom line. And another big thing, celebrate successes. right? So we have, again, like I said in the beginning, we set these huge impact goals that we write in our objectives without, building all the steps that lead us to achieving those goals. Now, if we celebrate the successes, we build the steps that are all the way that lead us to those big goals. We should also take out the time to celebrate the successes on that journey to getting there. And even when it comes to managing a team, managing your investors, managing your board, being able to celebrate those smaller successes keeps the organization on the path towards achieving the big ones. And again, be flexible. So the last 2 points, I think, feed off of each other. Be flexible and be ambitious, right? If we're honest with ourselves, if we know that the goals that we set for ourselves in January do not necessarily make it all the way through the year to December. And this is because things change. The economy changes. The operating environment changes. The internal operating environment changes. You have new goals. You have new people. You have new focuses. And as well as being dynamic and flexible in the running of our businesses, we should also be dynamic and flexible in the impact goals that we set for ourselves. And let's be ambitious. As an industry, I think it's important for us to be super ambitious, to set big goals for ourselves, because setting big goals is the only way you achieve them. So think big rather than think small. And that's it. I have a minute left. Thank you very much.
Thank you very much, Daya. Thank you so much for giving us 1 minute and 10 seconds. We're very grateful. Now to fintech and financial inclusion. I'd like to invite Branka Mrachayat, CEO 9PSB. Please let's give her a round of applause as she makes her way to the lectern. Thank you.
Good afternoon, everyone. I'm always passionate when invited to talk about financial inclusion, and especially when we are talking about role of fintechs in financial inclusion. So let me start first by introducing our bank. Nine Payment Service Bank is the very first digital bank launched in late 2020, and we are one of 5 payment service banks. So as the gentleman from NIPS mentioned earlier, that at some point Central Bank of Nigeria decided to leverage on access and technologies that telco companies had and still have across Nigeria. They decided to provide licenses to the 4 leading telco companies across Nigeria to establish their banks. So the major shareholder of Nine Payment Service Bank is EMTS or Nine Mobile. Nevertheless, we are a standalone digital bank that is on a mission to provide simple, accessible, efficient, inclusive payments, service, and banking products and solutions. And we are all about financial inclusion. So the goal for us when we started was to ensure easy access to useful and affordable financial services from anywhere. So basically what we do, we bring bank to our clients' homes. So there are no paperwork, there are no branches. Basically you open your account in 2 minutes. So, but beyond offering these accessible services, what we are very much passionate about and what we believe that is key element for financial inclusion in Nigeria to happen is focusing on financial literacy. So we want our clients to be aware of all various opportunities across the market and to educate them why they should be part of financial ecosystem. So let me go a step back and make a reference to financial inclusion. We hear this word like buzzing all the time, but what financial inclusion is all about? So the other day, I heard a very funny remark. A lady said that we all know what financial inclusion is. That's when fintechs go to market and they try to take your money to put on their accounts. So it's a funny remark, but financial inclusion is not about that. We truly believe that all individuals and businesses should have access to useful and affordable financial services. What that means in practical terms. It's one thing to access all these financially excluded people across Nigeria and to open accounts for them, but that's not sustainable financial inclusion. The first step for account holders is to start creating and actually recording the data on platform and systems so that they would go to the next step. Next step being providing them access to all financial services that will bring benefits to their lives. Access to capital, access to better healthcare, to better insurance, to pension funds. And it starts with financial literacy. And it also starts with cooperation between all market players. What that means, so that ultimately, this is not a sprint. It's a very, very long marathon, to put it like that. And for this society and economy to grow and thrive, people should have access to capital, affordable capital. And nobody will give loans, not even microfinance banks. Nobody will give loan to a market person that is doing all transactions in cash. So this is where payment service banks and 9PSB come in. So we provide limited, the difference between payment service banks and actually other deposits banks is that we cannot give loans. So that means that how we at 9PSB see our role is that we are building the bridge between those who are financially excluded and deposit banks, building this track record, collecting data, and preparing, educating those who are financially excluded and preparing them to be able to apply for loans that the deposits banks can only offer, being mortgage loans, being car loans, being like all other kind of different loans. So also, I would like to remind us about some numbers in Nigeria. Actually, the funny thing was that 2 days ago, on 23rd of October, we marked 10 years since the Central Bank of Nigeria launched National Financial Inclusion Strategy. It was 23rd of October of 2012. So it was a decade ago. At that time, the numbers are really, really low when it comes to financial inclusion, and Central Bank has set some really, really high milestones and expectations. I will not run through the numbers, but I will say that a decade later, we see that the needle hasn't moved significantly. And as of today, we have around 40 million of adults Nigerians that are financially excluded across Nigeria. So what are the challenges? Regulation is there, frameworks are there, policies are there. What were the challenges in order to reach those milestones? First, lack of access. We that live here in Lagos, in Victoria Island, we do have internet, we do have power, more or less. But people across Nigeria, they are lacking infrastructure, they are lacking access to internet, they are lacking financial literacy. Then the next challenge is also high access cost, and then we have cultural and society roadblocks. So what are solutions to that? And what are we focusing on is providing localized financial literacy. We know that there are more than 300 tribes across Nigeria that not necessarily speak English. So that means that we have to bring education to them in language that will be simple and understandable for them. Then we also have to create simplified product and processes. That means that we are not trying to enforce what we in fintech and digital banks see as appealing products to them, but we have to pinpoint their needs and to understand their demands and to complement their way how they live today in order to basically lead this transition from cash to cashless society. Then also low minimal cost of access. So that means with good platforms, with good solution, we are able to provide lower cost products to them. And then the key one is collaboration among stakeholders. So that means that each and every fintech player, regulator, and bank has its own role to play in this fintech revolution, to call it like that. So let me tell you, I have 2 more minutes. Let me tell you what at 9 PSB, how we are delivering on this. So we are deliberately positioning our bank as bank for all Nigerians. And we are giving priority to all local solutions through partnerships with local talents, with partnership with vendors, with partnerships with different fintechs, payments, different payments providers and banks. So we are all about products. If available in Nigeria, we don't outsource. We buy products and partners with providers here in Nigeria. Then also, as a part of our social objective and recognition of Nigeria as the next major fintech hub, we are focusing and deliberately seeking out and giving local people like youths, like women, like students, opportunity to learn about financial institutions, to grow and then improve their own circumstances and living. Then the next one, we are mobilizing all available channels across Nigeria. We are talking about fintech and digitalization, but the reality today is that in order to bring this to people across Nigeria, especially in rural areas, we have to do a lot of legwork. So we are reaching out to those who are unbanked and underbanked, underserved, to bridge the infrastructural gap through agent banking. As of today, we have 8,000 agents across Nigeria in all states. Then USSD, that is understandable, translated in local languages. Then mobile application, and also through partnerships and distribution. And at the end, we are creating an enabling environment in terms of banks' products that we are offering through our API, Open Banking API, for all fintechs and other stakeholders to be able basically to offer last mile services to targeted users across Nigeria. So my time, I have 8 seconds. So I'm very passionate about cause, and if you want to learn more how you can contribute to closing financial exclusion gap in Nigeria, please visit our site. We have a stand booth outside, and take a part in this revolution. Thank you very much.
Thank you very much, Branka. And now to FinTech and the environment, Green Tech Finance. Ladies and gentlemen, join me as I invite Dr. Bola Karimu, Financial Sector Lead at FCDO. Please, a round of applause for Dr. Bola Karimu.
Line, can you hear me? Hello, can you hear me? Hello, can you hear me?
Yes, we can hear you.
Oh, fantastic. Thank you very much. And my sincere apologies that I cannot join you in person, but I've been following the event, and it's very, very interesting and very insightful as well. So I've been asked to speak very briefly about fintech and the environment, and how we can really start thinking of how fintech can really help us to deliver on environmental goals. I'll try to be very brief. All the other speakers have really made very valuable points, and I'll try to leverage on that. In terms of background, I think it's no gainsaying that we are in a very difficult position now with regards to the environment, and we're likely in a state of emergency. When you kind of put on your TV or on to the social media, is all about flooding now, and that is just one aspect of the effects of the changes in the climate condition as it's impacting on a developing country like Nigeria. For me, with regards to the to the environment, I think it's very important for fintech and the financial sector at large to really be to rise to the occasion and the challenge in terms of designing appropriate and contextualize product and services that would enable Nigerians to be able to adapt and also to mitigate the climate change effect. We've seen a lot of displacement going on with the recent flooding. We've seen lots of lives. We've seen livelihoods and properties being destroyed. And apart from this, we see a key sector to the economy being really significantly affected, from agriculture all the way to economic and trade. But the question now is, how do we mitigate? How do we leverage on the financial sector at large and fintech specifically? What are the roles of fintech, whether they are startup, whether they are incumbent, whether they're technology company? How can they come in to support us in this at this crucial time to develop a newer approach, new tools and instruments that will enable us to adapt better to this changing climatic effect? This is a kind of part of the reality. This is a common sight when you turn on your TV and you see the devastating effect of flooding over the last few months, which has been occasioned by kind of high, above average rainfall, which has been compounded again by Nigeria as a country and other countries around us, Cameroon, Chad, trying to manage the amount of water in their dams, and releasing this water, which are flooding the farmland communities and also displacing people. And those are some of the statistics that are quite significant in terms of the reported death, the number of states actually impacted, and as well as the number of people that have been displaced and the ripple effect of that on the humanitarian crisis. Now, in terms of addressing all this, I mean, there's a new nexus, which is the interface between finance, climate, and technology. And as we approach COP27, one of the key reflections from the last COP is how can we interface between finance, tech, and climate to help support the development of new ways of addressing ESG risk and vulnerability. There are key environmental issues around flooding, as we mentioned earlier, drought, land use, soil degradation. The list is so endless. And the impact of financial sector as a whole, of fintech in specific terms, stepping in to help to address some of these will be significantly felt around livelihood, around generating of income and new jobs, around even getting some data that will enable us to start measuring and to start reporting and disclosing some of these vulnerability and risk so that we can better prepare and better manage the outcome of this risk as they occur. So how can fintech step in? It's very important for fintech and financial services generally to design products that are contextualized in nature and address specific demographic, also having a gender perspective to it as well, and also supporting the building of data and evidence on climate vulnerability that will support financial institutions and the wider ecosystem to deliver appropriate innovative products. So product need to be tailored. The product need to be able to address not just today's challenges, but challenges that are also emerging that might be impactful in the future. In addition to that, it's very important for financial institutions to start thinking of the need for a shift in their financial asset and portfolio towards a more sort of climate-related assets classes, including renewable energy, climate, as well as climate-smart agriculture. I'll quickly move to the next in terms of recommendation. I think it's important, as I said earlier, to contextualize innovative products and services. And this is important within the context of Nigeria for us to look at critical sectors like agriculture that fit into our livelihood. Someone earlier mentioned financial inclusion is very, very critical. What are the infrastructure that we need to build and where can fintech really play a valuable role within this as we try to shift away from the use of fossil fuel towards more renewable energy? What is the role of fintech within this? What are the opportunities that fintech have to really plug into that space? It could be in terms of paygo model or any other innovative model that will allow those that are aiming to shift away from the use of fossil fuel to be able to afford and access those new ways of living. So as I mentioned earlier, affordability is very critical. Access is very critical because even though this innovative product might be there, we've heard a lot about around solar home system, solar irrigation. If individuals cannot access and cannot afford, it's going to be very difficult, for there to be sustainability in terms of the usage of this innovative product. So affordability is important, access is important, and the PSB are also playing a very critical role, just like was mentioned earlier, in getting this access across to the end user in the rural area. So designing early warning sign very critical for farmers and within the agricultural space, and also design of innovative insurance product that will help to mitigate some of the environmental related losses that might be suffered by farmers, for example, in this case. Other areas that, quickly speaking, that we might want to start looking at in terms of designing our products and services is how we can leverage on fintech to help to incentivize or drive citizens in terms of their participation in environmental management. How can we pass ownership over to citizens and change their behavioral mode in such a way that they see the environment as part of their responsibility? Catering for the environment today in terms of the use of plastic, in terms of the way they recycle, and if fintech can step into that space to be able to design products that might, for example, allow users to really rack up points that could be used to trade for other essential commodities across local financial system, might be a good incentive for people to start engaging in terms of environmental management. Regulators play a very, very critical role. We've been engaging on the part of the UK government with the central bank, with the Security and Exchange Commission, with NICOM, with PENCOM, in creating an enabling and friendly environment for fintechs to ensure that they can thrive, they can co-create, they can test their ideas in a very safe space. For example, the use of sandboxes are very popular, and we're trying to drive that within our engagement with the regulators. Now, we also need to institutionalize the whole idea of a green fintech challenge that will bring together both the private sector as well as the public sector counterpart for everyone to co-create and partner within that space to be able to deliver on the environmental goal. I've also included a bit of the UK's approach and some of the lessons that we can learn from the UK. In 2018, the UK, through the Financial Conduct Authority, launched the pilots for the Green FinTech Challenge to support innovation and growth within that green space. I've included a link here for anyone that might be interested in that particular challenge. The whole idea of the challenge is to bring together startup, incumbent, as well as technology providers using instruments such as regulatory sandboxes, direct support, advisory, as well as bespoke green finance cohort engagement to be able to drive this new and emerging idea about the use of green fintech to really drive environmental impact. Lastly, I've included a bit of example in terms of use cases for anyone that might be interested in this. But at the end of the day, it's very important for everyone to come together in terms of how we can really build the ecosystem in such a way that we create more awareness, create more trust, create more leverage for fintech to be able to drive the changes that we want to see within the environmental space. I'll stop here now. Thank you.
Thank you so much, Dr. Bola Karimi, for giving us 2 minutes, 30 seconds of your time, and of course, for an insightful presentation. Please, another round of applause for him because he can see us and he can hear us. All right, so it's now time for Q&A. I would like to ask the speakers who just took the masterclass to please step forward. We'll take quick pictures, but before pictures, we'll open the floor to the audience to ask questions in a few minutes, and then we'll take pictures, and that'll be it for the masterclass. Please, I'd like to invite the speakers for the masterclass. Ayodele Adeyemi Faboya, Dayo Ademola Joseph, Branka, and of course, Dr. Bola will be joining virtually. So please step forward. Also, I'd like to remind participants who are joining in virtually, you are an important part of this conference. So please, online, drop your questions in the chat box. Use the chat feature, the Q&A feature on Zoom. Drop your questions, and then we can select questions, take questions before we move on from this session. Now, the floor is open to people who have questions. If you have any questions here physically before we take pictures, please indicate by raising your hand. Any questions, physical questions, before we take pictures and close this session? Any physical questions? Okay, I don't see any hands. What about virtually? Please, do we have any questions virtually? No questions online as well. So we can just take our pictures. Please join me as I celebrate all our speakers who have taken the masterclass. Okay, now in the absence of questions, I have been informed that we can take final comments from speakers. Hopefully, if our speakers can make the final comment as brief as possible, would really appreciate. I'll pass the microphone around so that our speakers, get to use the microphone to ask the question. So please. Okay, so you can do a long press at the bottom of the microphone, and you can speak, starting with Dayo Ademola, who's at my extreme right. Final comments, please.
Okay, you're putting me on the spot. Final comments. My specific talk was around the social impact of fintech, and just wanted to reiterate that I'm a huge believer in it, and a huge believer in the confluence of social impact and commerce and business. And I think that's what, I don't know how many operators are in the room, but that's what I think needs to be at the forefront of our mind, that we have our revenue targets, we have our business growth targets, but as much as possible, we layer impact goals on top of that. And I think that's where the most change can be made. And we also need to make a concerted effort in measuring those goals, because I think that's something that we don't do very well, is actually measure the impact that we are having, and not to be shy to publicize that impact, whether good or bad, because it sort of garners the entire industry into doing better.
Thank you very much. Over to you, Joseph. Final comments, please.
Hello.
Okay, yeah, thank you. I think my final comment has to do with one of the points which I didn't mention, was in relation to ensuring that you have a board that is, in the true sense of the word, independent. It doesn't mean, we have seen instances where in order to meet regulatory requirements, people ideally who should not be members of board, who have no experience on the issue they are going to be looking at, are appointed to board just to fulfill, quote unquote, all righteousness. I think in the enlightened self-interest of promoters of various fintech is to ensure that you have a proper board that can look the founder or the brain behind that company in the eye and say, this route we are taking, we shouldn't take this route. Not a board that will be telling you, yes, sir, yes, sir. So that it will not be in the interest of the company. particularly in the context of Nigeria, because I had cause to have discussion with someone about a week ago that has to do with um, generational companies in Nigeria. When you look around, you see several names that were top notch in the corporate world in those days. But today, most of their companies are no longer in existence. And that is a challenge for us all that are here today and those that are not here, is to ensure that we build institutions that will outlive us and that can survive from generations yet unborn. And with that, we'll have that would happen by inculcating good corporate governance in the operation and management of such institutions. Thank you.
Thank you very much, Joseph. And to my left, let's start with Branka.
Thank you. So what I would like to say, like as my conclusion at the end, how I see Nigeria today and fintech space is that Nigeria is a country of two opposites. On one hand, we have all these amazing people, all these fintechs, many of them being recognized as unicorns. We see amazing progress in the last 6 years. On the other hand, we have Nigeria that I mentioned, people that don't have access to power, people that don't have access to internet, to smartphones. So in my conclusion, I would like to say that in order for this to change and to move forward, we all have to come together, not to look at each other as competitors, not to compete between banks, fintechs, different service providers, but to cooperate and also to try to impact regulator and NCC as well to make some changes in regulation to provide actually tools for people across Nigeria so that fintechs and digital banks and payment service banks can provide services through those tools. I'm talking about cheap smartphones. I'm talking about internet access coverage in rural areas of Nigeria. Many things have to happen in order for fintech space to thrive in Nigeria. And we all have to put our strength together and to deliver on this. Thank you.
Thank you very much, Branka. Yes, miss, it's okay to clap. A round of applause. Thank you. Thank you. And we'd like to hear from Ayodele. Final words, please.
Yeah, it's working. I mean, a lot has been said today, and we've seen some of the pitches, we've seen some of the beautiful things that are being done. But the truth is that unless fintechs understand the importance of getting help, they will always be at risk. And that's the truth. We can't achieve what we want to achieve in the ecosystem without getting help. And that's not just legal help. It's also making sure that you have the right risk manager. It's making sure that you have the right accounting system and accountants. It's making sure that you have the right auditor. It's not focusing on the product and the technology to the exemption or exclusion of other key things that are necessary to build a business. And just as Joseph has said, it's about having the right board as well. There's the reason we have a board of directors. They're supposed to help you. They're not just dummies, right? So it's about putting the right people on your board so they can perform the right functions. Essentially, it's just to encourage and emphasize that we get the help that we need so that we can achieve the heights that we want to get to as fintechs.
Thank you very much. And we'd like to hear from our virtual speaker, Dr. Bola Karimu.
Yeah, thank you very much. I think I'd just like to re-echo the importance of strategic partnerships and collaboration. Because for fintech, at times it might be that it's easier to work in silos because you just want to get on with their techie stuff and just get it done. However, it's important to bring everyone together, whether you're talking about the fintech themselves, banks, the consumers, to all come together within the same space and to have that enabling environment. I mean, we've been doing a lot in terms of advocacy around supporting the regulators to create that sort of environment, and so that the players will not see themselves as competing in that sense, and can leverage on one another to create an ecosystem where the beneficiary are the people at the bottom of the pyramid. And I think that is one thing that is always missing in most of the design of product and services. A product might be designed for those in the urban area with the exclusion of those within the rural area that are really, really in need of those products and services that will really lift them out of poverty. So as we design this innovative product and services, it's important to contextualize those services and products within the Nigerian space and see how this product and services can really address the needs of the country at large. Over.
Thank you very much, Dr. Bola. Please, a round of applause for all our speakers. We'd now like to take pictures. Please, let's take pictures. Let's please rise. And then Dr. Bola can please stay on the call so that somehow we can capture him, on the screen here. We don't want you to miss out on the picture. So please, let's take quick pictures. Okay. Okay, maybe you can take one together. Okay, you can come together then. Thank you very much. Thank you so much. A round of applause for them as they make their way. Now it's time for a product pitch. Okay, you know what I've observed, ladies and gentlemen? I observed that it seems that we need to refill our reservoir of applause because it seems like it's going down. But I know there's so much more. Let's practice it. Let's be more generous with our applause as we celebrate and appreciate our speakers. Thank you very much. Now to the next product pitch. Oh, that's great practice. Thank you. Thank you. And I'm sure that our virtual delegates are also joining us, with sending their favorite emojis to the chat box and, just giving it up for all our speakers who have been contributing to this conference. Now it's time to go into a product pitch, and this one is on Ijebu Market, marketplace, supply chain, and finance for agriculture. And the product pitch is to be done by Segun Ogunlana, CEO, Ijebu Market. A round of applause, ladies and gentlemen.
Okay. Hello? Okay, thank you. Sorry, good afternoon, anyone. I'm just trying to test out my slides before I begin. So it's not responding. Hmm? Downward. Okay. So yeah, good afternoon, everyone. My name is Segun Ogunlanu. I'm the CEO and founder at Ijebu Market. So first, let me tell you about Musa and Tony. Musa is an uneducated smallholder farmer somewhere in northeastern Nigeria who lives on less than $2 per day. And we have 10 of millions like him in Nigeria, as well as 10 of millions of him across Africa. And this is Mr. Tony. I'm also in the picture with him. He's my neighbor. He's an educated potential farmer. And we have also tens of millions like him as young Nigerians, as well as middle-aged Nigerians who are interested in agriculture. 2 weeks ago, Mr. Tony reached out to me and asked me, Segun, I actually have like some acres of land in my village. Please, two things. What can I plant there? And who can I sell to? And I told him, sir, let's have this discussion later. We had the discussion. And when he finished with me, he said, Shegun, in his words, I am not doing anything until Ijebu market is ready. So you need to know why he said that. Please come along with me. First, we need to discuss about the problems that Musa is experiencing that made Mr. Tony say he's not getting started first. One is the issue of where Musa cannot cultivate his entire land. Most people only cultivate just a fraction of their land because of several issues like market access and other things. And secondly, when Musa even cultivates his land and he plants like 1 to 2 some maize on his land, he gets 1 to 2 metric tons on a land that is supposed to get 6 to 9 metric tons. He will still lose 20 to 60% of that to post-harvest losses and harvest losses. And when you combine this is a $203 billion Nigerian problem and a $650 billion African problem. Now, these are the solutions that made Mr. Tony impressed. One, we're already building supply contracts with key manufacturers. And after doing some steps, this set of smallholder farmers and potential farmers like Musa and Mr. Tony will get seeds, will get fertilizer, as well as extension service and support to ensure that they maximally cultivate their land. Next is for the harvest losses, to prevent the harvest losses, we provide extensive harvest support, logistics to pick up harvest, and ensure that it's delivered to cold or dry storage or direct to the people that have built the demand contracts to ensure that once that is done, for anybody that plants, you're able to know that at this also point in time, I'm harvesting, we are picking up, and you're getting your returns as it is moved to customers like manufacturers, exporters, and international buyers. That we've actually been able to build orders close to around $2 million as of between end of 2020 to 2021. And we are only able to fulfill just about $600,000 of that because of finance. As we've been making most of our monies from product sales, trade brokerage, trade management, logistics, and finance, although 70% of our transactions actually came from product sales. And the market size of this for agriculture sits about $3.5 trillion globally and around $400 billion in Africa, at least in the basic sense, excluding processed agricultural commodities. Of course, everyone will say, you need to actually, who are your competitors? You have competitors. Truly, well, we have Apex, we have Babagona, we have Thrive, we have Harvest Plus, but we don't see them as competitors. We actually see them as partners and collaborators. In fact, even one of them, a transaction that we're supposed to conclude between Boko and to some parts of the Southwest, as well as some place called Gabrichede in Taraba, to move some also things to the Southwest for them as of last week was between $100,000 to $200,000. But because we couldn't facilitate that, we had to cancel that off. And you will guess why would they contact us? It's due to our own unique advantage of our supply chain efficiency, because they know we have presence even across the border, off to Maradi in Niger Republic, to Gabra in Cameroon, to some parts of Chad. So this, we have the country covered for most food and agricultural commodities. And we also had other competencies like our low-cost infrastructure, technology, as well as our access to varieties. And for us to be able to provide these for all the Tonys and all the Musas everywhere, we're looking at incurring some expense of around $4 million for between a period of 24 months and profits of around $7 million. And for us to be able to do this, we need to actually take things much more serious. And like our speakers have earlier talked about things like governance, regulatory structures, and everything, we need to put much more things in place to be able to fulfill all that. And that is why we're actually looking at, getting a kind of pre-seed, say, of around $6 million, then $10 to $20 million debt capital commitments that is required for these core commodities, and to also help us to build our team, build our technology, working capital, partnerships and some collaborations, and some cold storage and dry storage leases and others. So these are things that are actually essential for us to be able to put there, because honestly, there are things that we are seeing about food and agricultural commodities across the country that we will actually still feel the very big impact in 2023. Let me just leave it there. We actually have a very great team. My background is chemical engineering, and I understand process and flow. And I'm a systemic designer, salesman, and I'm a social innovator. Tech person, Shola, is a senior software engineer, full stack. And we also have a field agri consultant, Mr. Abayomi. And with this, we are also looking at building an extensive team around ourselves to be able to ensure that we deliver this for all the Musas who are tens of millions in Nigeria and Africa, as well as all the Mr. Tonys who are tens of millions in Nigeria and Africa, also to ensure that we are able to feed ourselves, feed the world, and ensure that because in as much as we are looking at things as financial inclusion, we need to understand that these farmers, as we look at money in our pockets as capital, they also look at things like soya, things like maize, things like dawa, that's sorghum, and also as capital. So this is also a form of financial inclusion. And let me just say thank you, everyone, for listening. Cheers. Thank you.
Thank you very much, Segun Ogunlana. He's giving us a whole 3 minutes, 1 second. Thank you so much for that. Ladies and gentlemen, we're now moving on to the next and the final panel discussion for today. Now, the focus is on charting new paths. Charting new paths, what's new in the tech space, InsurTech, Agri-Tech, EdTech, Legal Tech, and so on. So I enjoin everyone to sit back and enjoy this discussion because it's going to be very insightful. I'd like to invite the moderator, Wale Olajubu, MD, Asset MFB. A round of applause as he makes his way to the stage to come in first and receive the panelists. Now, our panelists are Peretimi Perez, Senior Associate, ALEX. A round of applause for her, please. We also have Nosiru Shonoiki, Head Agency Banking, Liberty Pay Limited. And Gerald Eri, CEO, co-founder, Last Mile Financials. A round of applause, please. Thank you. Over to our moderator.
Good afternoon, everyone. I hope you can all hear me. Can you all hear me? Excellent. We've been having interesting conversations since the morning, and I want to say big thanks to the organizers of Nigerian Fintech Week for putting this together. I and my colleagues here will be discussing the future of fintech, technology in Nigeria, in Africa, and where we are going from here. There is something I always say, that technology does not start and end with fintech. Am I right? There is the insurance tech, which we call InsurTech. There is agrotech, and there is edutech. And today, we are going to put some light, to shine some light on where we are and where we should be. Permit me to read something I've put together for introduction. Do you know that in Q1 2021, the Nigerian fintech industry generated about $293 million in revenue? This revenue is now projected to reach $500 million by Q4 2022. A huge growth, you would say, from the $178 million, which we had in 2018, and $153 million, which we had in 2017. In this panel session, we are going to be going down memory lane to examine how technology has affected our economic growth and to chart new path for sustainability and development of technological ecosystem in Nigeria.
Okay, so thank you. I am going to be starting my questions with Sheol. Hi, Sheol. Is Sheol here? He's not. So I'll be starting with Bio then. He's still not here. Oh, he'll be joining us. Okay. Gerald is here. Gerald, tell us more about what is the difference between earned wages and salary loan. Before we go full stack into the technology business, tell us about earned wages and salary loan, the difference. Thank you.
Thank you, Wale. Good afternoon, everybody. So, just to get right into it, earned wage access, I think that's what you're referring to, right? Earned wage access is not a loan. It's also not an advance on your salary. So I will explain earned wage access is this. It's basically an employee benefit that is offered by employers to their employees, which enables them to have access to a portion of their earned but unpaid wage before salary. So I'll give a good example. So let's say you have an employee that earns 60,000 naira a month. That pay is earned over 30 days, right? Because we have a 30-day pay cycle. Now, let's say at the middle of the month, that staff has an urgent need for cash to meet a sudden requirements. An emergency came up, medical bills, that call which we all get from the village sometimes, as Africans. And you have that situation, and this staff doesn't have to go to a payday loan company to meet that, which is where most people meet that need right now. All they have to do is assess what they've earned. So if I earn 60,000, mid-month I've earned 30,000, so to speak, but I've not been paid for. So I can assess a portion of that of which I've earned, which is 30,000, to meet that need, instead of actually approaching a payday loan company to take a payday loan. Yeah.
All right, thank you. Please put your hands together for Gerald. Clap for Gerald. I'll be taking Pere now. Pere is a lawyer. When I put it that way. So, Pere, tell us, do you think we have enough regulation in the technology fintech space?
Okay, so specifically in the technology fintech space, right? Well, as we're aware, there's a primary regulator for the fintech space, which is the CBN, right? And I think I would say that the space is regulated to a very large and good extent, if I would say that, right? So we have various guidelines that the CBN has issued. Of course, regulators and regulations will always follow technology. It's like a way of life. The technology is going, and then the regulators have to catch up. So they're always playing catch up. I don't think you can ever have a time where regulations and the technology are at par. But the regulators can do their best. They can understudy the space and then put out regulations to regulate the space. And I think in that regard, CBN has more or less done a fine job. Yes, maybe not 100%. Maybe maybe people in the tech space can also, fintech space can also say that they've had some issues with some form of CBN regulations if we want to go into cryptocurrency. But in general, in terms of payment, processing, and all that, because fintech is a very sensitive area. It's people's money you're talking about. So there could be some form of over-regulation, but I don't think that we have gotten to that level yet. And in the aspect or in the areas where CBN is not really able to regulate or they can't understand the technology, they have their sandbox program. Okay, we don't understand what this fintech is about yet. We don't want to stifle this innovation. So come into the space and let's understand what you're doing, and we can see if we can put you into an already regulated area or bring a regulation to more or less just foster the development of that fintech space. So let's not limit these guys. Have they put out regulations that people have not fancied in the fintech space? Yes, like I said, the cryptocurrency, a lot of persons have some issues with that, or why can't we trade through the official channels? Maybe some other countries, cryptocurrency may not be a legal tender, but there's not been any ban. We still have access to official channels, and we're able to do our businesses under the radar of the regulation. But what CBN has done in Nigeria is more or less take out these guys from the radar of the regulation because they don't believe. Of course, cryptocurrency is very volatile, and understandably so. So yes, I would say that there has been a lot of regulation. Even though, of course, CBN is not the only regulator. We have the SEC, and we have NDIC and the rest. But I would say that the fintech space is somewhat well regulated, and of course, we're getting there. It's never...
Thank you very much, Perry. Thank you very much, Perry. Please put your hands together for Perry. I'm going back to Nasiru. So, Nasiru, I play very well in microfinancing, microbanking, and we do a lot in financial inclusion. Yes, there is the data that keeps jumping up and down that Nigeria is currently about 65% unbanked. That's the data that we keep hearing. If it's true, I don't know. You do a lot in agency banking. So tell us, how is agency banking driving financial inclusion in Nigeria?
All right, thank you very much, Wale. So agency banking, per se, it's the essence of financial inclusion or exclusion to a very large extent is a mirage. It's quite multifaceted because you look at the FINA reports year after year and you see that 65% underbanked, 65% of Nigerians are financially excluded, majority of these people are in the north, but yet you go to an Ikorodu bus stop today and you see about 12 people doing agency banking. You leave Ikorodu bus stop and you go to somewhere in Ijebu and you see about 50 people at the bus stop doing agency banking. So in the real sense, right, yes, agency banking is doing a lot in driving the financial inclusion, but there is more to financial inclusion than the money memorial that is actually collecting your cash to transfer money to someone.
So what is this financial inclusion? Tell us, what is financial inclusion?
So financial inclusion basically is, in a layman's language, is saying, how do I take an Alajuno's money that he prefers to keep in his house? How do I pass it through the financial system such that I can record it as part of the country's GDP or the country's income or real income? But in the real sense, right, we are not exactly doing that when it comes to agency banking. And that is because a lot of us believe that, or a lot of the investment in agency banking is quick. And we cannot wait for the longevity of that investment. Longevity in the sense that POS terminals alone will cost about 150,000 naira, and you can't wait for about 2 years to recoup that money. So, per se, it is difficult to now convince an Alhaji Musa to say, bring your money to the bank, let me help you pass it through the system, because he doesn't even trust the financial system in the first place.
I'm still staying with you. So the lending industry, micro loans, nano loans, do you think the risk in this industry is mitigated enough? Do you think individuals, corporates, or organizations like ours can do more to beat down this risk?
Okay, so that question, to a very large extent, I think it goes down to the person, the borrower's borrowing behavior per se. So you have someone that is coming to your bank to take a loan with the intention of not paying back that loan. So, and that is because most people believe that nothing can be done when it comes to recoup. They will tell you it is a civil issue. You and the person should find a way to sort it out. But in the real sense, it is doing a serious damage to the firm that is giving out this particular loan, because the cost of loan itself is quite high. The cost of that investment is quite on the high side. So I feel there are like two different ways that we can actually mitigate against this risk. The first one is leveraging on metadata. Now, let me explain what I mean by metadata. Now, metadata is, you see, those data that are non-transactional that you can find about the individual before you give him a loan. For example, you have, authorized access now to the person's BVN, right? And you're able to see the person's SMS or the person's SMS trend. And you notice that this person does this particular set of things. Not his SMS alerts now from his banks, but other things that he does. You see that you check the person's browsing history. You see what the person does typically. Again, like I said, authorized access, so that you don't fall against the data protection regulations and the like. And the other thing that I feel we should do again is Nigerian governments can actually come up with the use of credit scores or credit ratings on our daily lives in Nigeria. So I shouldn't be able to rent an apartment if my credit score is very, very low. I shouldn't be able to access some basic amenities in Nigeria if my credit score is very low. I believe this is what is done in more civilized climes. And it should be, if we can adopt that in Nigeria, I am very sure that 100% of Nigerians will not borrow money with the intention of not paying back the money. Thank you.
Thank you very much. Please, if you are watching online or you are here in the hall and you have any question, put it down. We will be happy to answer or take any of your questions. Thank you. I'm going back to Gerald. Gerald, HR Tech seems to be coming online to the mainstream. Tell us, in the last 12 months, 24 months, what has been the influence or the inroad of HR Tech in Nigeria?
Thank you for the question. So I was privileged last year, early this year, to be at the UK Tech Week, and I was on the breakout session as one of the panelists. And we're talking about future of work. And two things stood out from that conversation. And it was the issue of, we talk about 2021 being the year of the Great Resignation. And people were leaving their jobs for various reasons. In Nigeria, it's termed differently. I think it's called Japa, right? Not the Great Resignation. People are actually leaving. And it's not a tide that is about to abate. PwC came out with a report. That was a survey that was carried out in 48 countries around the world with 54,000 workers. And it says that in 2022, 1 out of 5 employees will resign from their jobs. So that's why this year has been termed the year of the employee. And back to your question, how does this connect to HR Tech, right? People are leaving their jobs for several reasons. You can get career stagnation, rising cost of living. They don't see where they're going with their job. Yeah, they don't see opportunities to scale. Pay was also a major factor for most people that are leaving their job. And the COVID brought about a whole new way of how we work. We had remote work became a thing in Nigeria. Now we moved back to some kind of hybrid work for most people to blend the work. But the trend is also going on, like I said. So you want to, as an HR tech expert, you want to look at how do you retain skills locally? Because now you are competing not just against, location is no longer an issue, right? I can be living in Nigeria and be working for a client in the US. So I'm competing with, as a company, with a company in the US. So Amazon, so you work for a bank, your competitor, the person that's trying to get that talent is probably a bank in the US or one fintech company sitting in the US who has a lot of money to spend. And when you convert the rates, the staff is looking at, okay, what am I doing here? I should work somewhere else. Nomadic jobs are coming now. If I cannot work in Nigeria because for whatever reasons, regulatory issues and all that, I can relocate to countries like Dubai, like Lithuania, Estonia, get a nomadic visa, stay there, and work for companies without having to seek residency in the country where I really want to work, which is a US company. So these things are, so tech companies are actually coming to come together and say, look, how do we get skills, irrespective of where they are located, get them settled in work? How do we provide staff? Nowadays, you have to look at, we talk about customer experience. We're getting to a place where you have to think about the employee experience in recruiting your staff. What kind of experience does this employee want? A Gen Z is different from a millennial in terms of the Gen Z guys want everything. They want it all. They want to work from home. They want to work in their pajamas. So how do you make them work for you and deliver productivity without you trying to constrain them as to how they would live? And so all of this trend that's been affecting is what we're affecting. So you have to look at, as for an HR tech, as I say, like I always say to people, I say, look at what are the reasons that led to the Great Resignation. If you can look at those reasons and trying to use technology to fix those problems, right? And that's what we're doing at Paymaster with End-Wage Access. Give people access. People want to be paid on demand. I don't want to wait till payday. I've worked for today. Pay me for what I've done this week. Don't tell me to wait for it because I didn't earn it on payday. I earned that money today, so why can't I have it, right? I've worked for it. So those are the issues that we are dealing with. So you have to be more flexible. We're going to see where contracts are going to be specific. So I'm recruiting 2 people for the same role, right? And one has a different contract because I'm going to profile that person and see this is how this person wants to work. This other person wants to work this way. There's a trend that's also going on now globally called shared jobs. So I can apply for a job and 3 of us will do it together officially. So I apply for the job and I tell the employer I'm going to do 60% of the job. He's going to take 20%. The other person is going to take 10%. And it's allowed. So the whole world of work as it is changing altogether. So that's the future of work. And for us as a country, we must key in if we want to make impact. So I said, well, we need to move away from discussing, especially at tech companies, customer experience and product market fit. We need to start discussing the employee experience and how do we have employee organization fit. Thank you.
Excellent. Thank you. Thank you. I'm still staying with you. You have touched a nerve. For business owners in this hall, the Jackpot syndrome is an issue. Some people agree with me. You have a situation where a member of your team walks up to you to say, I need to have a conversation with you. When they come and they say, I need to have a conversation with you, there is that palpable fear. Are you leaving? So I'm going to be holding you. I'll be asking you and Perry, our lawyer, in-house, what should tech business owners, what should we be doing differently to retain staff, to reduce this Japa syndrome? I would like you to speak to that.
That's a very complex question, but I'm going to attempt to answer it anyway. I was just talking to somebody in tech, something we're trying to do together, and he said, I was saying, look, I should get you arrested. You guys are messing us up and all that. And he said, you know what, it's not our fault. The whole tech team just resigned 3 weeks ago. And I said to him, I think one thing we should start doing is to start creating redundancy more than ever before. So I think we need to go back to the days where you have somebody on the job and there's somebody understanding the person from the one. Like another study, knowing what the person is doing. So you don't have that sudden gap because this jackpot thing, there's no notice. Like you said, once they say that question, that's the notice, and they are gone the next day. I was talking to a friend that works in the bank, and he said they wake up every Monday and they find that 1 or 2 branch managers have gone. They have branches without branch managers. And people living are not lower level staff. These are people that they have your core institutional values and all that. So you are looking at how do you start all over again with these guys. So first you create, like I said, create redundancy as a stopgap measure. Then I go back to that first question. Why are they leaving? What can you do to retain them? And it's not one cap fits all, really. Because a millennial's need is different from, like I said, a Gen Z need or somebody who is a baby boomer. So you need to look at what can you offer the person? And there's a lot of talking, and we do that in our office. Like you have to keep talking to these people, like engaging them, buying into the vision. I think employee share scheme should be more of a norm now than an alternative. Like it should be not an option. They are working for you. They are building the profits. Then let them. They should have a share of it. So things to just keep people have like a sense of belonging. And look, I don't just come to work here. We're doing this together. We're building something for the future, especially in the tech space. We're going to turn this company to a decacorn, to a unicorn. And you're going to be part. And Gen Zs want to be part of something, right? That's a major motivation factor for them. They just want to be part of creating something that's unique and different. So you want to be able to key into that dream and say to them, and say, look, they're not just going to be part of something, but you could also benefit from it other ways. And I think if you can marry that and probably use some AI to create some employee models where you can say, okay, this is a fit for my industry, for my company, or for this role, then maybe we could just solve the query. Thank you.
Thank you very much. I'm not sure if a couple of business owners will agree with you, though, but, thank you.
This is what it is.
Perry, what do you think? Do you think we should begin to look at legal angles to this business? Should we have staff, members of our team, sign 5-year, 7-year, 10-year contracts and just keep them instead of jackpotting?
Okay, so in terms of contract, right, you can sign anything, and these employees can agree at the time where they want to sign this contract with you. So if you say, let's sign a contract and it's a fixed, let's assume that would then be like a fixed term contract and you have to be here for 5 years. If you leave before 5 years, then you pay back this amount and pay back this amount. That's something that can be done. Again, though, it could be subject to review. So assuming the employee decides to leave and you say, oh, I want this money back or I want this back, and the employee doesn't have it, or has even, like you said, jackpot, so she will go to America and bring him. When you check the costs, right, in terms of on paper, would it work? Yes, maybe it will work, but in practice, maybe not. And just like you said, maybe one other way you may want to look at it as against a compulsion to work for a fixed period that is not certain. Maybe if you give them a sense of belonging, it's not certain again, like I said, right? The world is a global village now. What a Nigerian company may offer in terms of shares or stock, and if an American company was going to offer that, I'm sure most people may want to go. But a sense of belonging. So if I were to go into a company and I wasn't just being paid, or it wasn't just about my salary, and I had some shares, which is why you have an employee stock option plan, and it's becoming very rampant, and they have a sense of belonging. So I'm not just working here as an employee, I own a stake in this business, and their ideas, more or less, their ideas and whatever they do in the company they're taking a board, right? Even though the society in general, the environment may compel them to leave, there's only so much you can do. But I'm sure with stuff like that, people are very inclined to wanting to have a sense of belonging and ownership. So if you offered an employee an ESOP plan, right, and if they had to stay for a period of time for that share to then vest, they would stay. So let's say, oh, you get 5%, I'm just giving an instance, if you stay for 4 years, and this 5% will vest over a period of this 4 years. It gives them, it helps them, it's more like an incentive as against the compulsion of sign 5 years and don't leave, right? You can't really hold them down. So this is a better route, I think.
Okay, I like the percentage idea. I think that works. I'm going to still stay with Perry for a while. And one of the issues that I know affect technology business is fundraising. When people are about to go into the market to raise funds, or they've raised funds, and then something happens to the co-founder, or something happens to the CEO, and the business may or may not continue, or, the way you're raising money, you leave them stranded. Perry, please tell us, what are the legal structures that people need to put in place during fundraising? You're speaking from both the fundraiser and also the sponsor point of view. Thank you.
So in terms of fundraising, right? Which one of the basic, which I'm sure before anybody even wants to raise fund, right? To a large extent, you would have incorporated your company. That's almost very basic. Although not always the case, you find some persons with ideas, and maybe you have family and friends sponsoring your venture. At that point, you may not have a legal entity. But if you're really seeking to raise funds from persons who are not, maybe investors like VCs and people who don't have a direct relationship with you, you want to have a certain level of legal structure in place. Not just legal structure, of course, financial and business, but I'm speaking to the legal structure for now. So you want to have your company incorporated, not as a business name. There are different forms of company, right? So personally, if I were going to invest in a company, I would invest in a company that's a limited liability as against a one-man sole proprietorship business. So that's one thing you want to have in place. And another thing you want to have in place as well is also your corporate governance structure. I think the masterclass speakers from Udodoma spoke on that, right? Where you have a proper board setting. It's not just run, quote and unquote, as a strict family business where it's just me, my child, and my husband who are directors of my company. But so I'm speaking from the startup perspective now, or the investor looking into the startup perspective. So if I come and I want to invest in a company, I want to see that you have at least a certain level of legal structure and compliance, and not expecting that you would have fulfilled all your compliance checks, but to a large extent, I want to be sure that your corporate structure is the right one. I want to be sure that you have the right people on board. In terms of employees, I also want to be sure
So hold on, Barry. So is it okay for I and my brother to start a company? So I am the CEO, my brother is the CTO. Is that a problem?
No, that's not a problem. I spoke about corporate governance structure, right? So
Yes.
not necessarily the shareholding. That may not be, it depends ultimately, right? So if your brother is a CTO, he has the skills, and you can show that he has the skills. There's really no issue as to that. But if it's just for the purpose of he's my brother and he holds this role just because he's my brother, some investors may be skeptical, right? Not that doesn't mean that they would not invest, or that doesn't mean that it's not a legal structure for investment. But if your brother, I don't know, I think one of the product pitch guys, I don't know if it's his brother, but I saw the names, right? And if they both have the technical skills and they're able to bring it to bear, and they show what each person brings into the business, if I'm investing in that business, I wouldn't have an issue. And then again, I would look at your director structure. So it doesn't have to be limited to shareholding. I was also going to add, again, in terms of funding, so if you were a fintech or any other, I think fintechs are mostly regulated. You want to have your licenses, right? So I would not think that an investor who would want to invest in a company knowing that that company is in a regulated environment doesn't have a license. If you don't have a license, get a partnership or something like that, but make sure that your business is legally poised for these guys to invest their money, because investors do their DD. Sometimes maybe they don't, but for the most part, investors who know their salt and have their, more or less, had a series of investment and they know what to look out for, they would definitely be looking out for a certain level of legal compliance. Nobody wants to invest into liabilities and penalties in the future and risks and all that. Yeah.
Excellent. Thank you. I'm coming back to you. What environment do we need to foster, given the new tech wave? A lot of people are playing in the fintech space, but now we are going further. We are talking about the agro-tech, the insure-tech, even the HR tech, and of course the legal tech. But what environment? I know you play a lot in the micro space, the agency banking space. So what environment, what sector do you think we should focus on in this new revolution?
Okay, thank you very much, Wale. You see, if we say we should focus on a particular segment of tech, then the whole development will be skewed to a particular segment. And what we need at the moment in Nigeria is an all-encompassing growth, a growth that is all-inclusive. So let's take, for instance, a farm in Kebbi. I was in Kebbi sometime last month, and I tried to activate some agents. And I realized that my POS can get to that place, but they don't have network in that place. What that implies is that my POS is just an empty box when it gets to that particular location. So the people in that village actually need a sort of tech that will give them access to mobile services, mobile data services, even call services. And so it means going to that place means that even if I want to focus on the fintech, the mobile tech needs to play in that space. And then the agri-tech, because most of those people in that location are mostly farmers. So agri-tech needs to play in that place. The insure-tech also needs to play in that place, because they need to start insuring the food commodities as well, the farmlands, the produce, like Mr. Shegun mentioned earlier. They need to start insuring all of those products. So it is the kind of environment we need to actually encourage in the new era, like, as we're trying to actually portray. Is an all-encompassing growth or environment per se. Thank you.
Excellent. Thank you. My next question will go to you. So what are the hindrances in this tech space? He has spoken to, we shouldn't focus on just one business case. But from where you sit, what are the hindrances? What hindrances do you think will affect the expansion, or that is currently affecting the expansion of the tech space in Nigeria?
Thank you. I think it's spoke to one of it, which is, I think, infrastructure. is a major factor that we need to look at. And I have to go back to skills again, people. If you're talking to an angel investor and you prepare your pitch deck, one very particular part, they say, look, we're not investing in your idea, we're investing in the people. So they want to know who are those behind this dream. So it's important that you get the right set of skills to make up your team. Now, with Jackpa, people are leaving. I've seen some fintech companies where they tell you, and I say, oh, we have 3 founders. One is in Canada, one is in UK, and one guy is in Nigeria. And I'm like, good luck getting some funding, right? So, but that's the reality on ground right now. So you have to find a way to really get the right set of people who are willing to not just buy into the vision, but commit. Not just get involved, but commit to making it. So I think infrastructure, people, their idea is that tons of sectors to be disrupted, tons of sectors. I was sharing with somebody that the biggest gym in the world, one of the biggest gyms in the world, does not own a single gym equipment. Not a single gym equipment. But the biggest gym in the world just aggregating gyms. You get so, and those are sectors that haven't been touched. That's like a subset in the head tech. So there are a lot of things we can still do. And just because we're a growing economy, I won't say underdeveloped, we're a growing economy, that means there's so much opportunities down here to really explore and make money, so to speak. Make impact, more like. Sorry.
You are not speaking to some of our pain points. I feel you are avoiding answering some questions. So I will throw them at Perry. So, Perry, do you think, and I hope we are not getting into trouble here, do you think our chief regulator, names withheld, do you think our chief regulator is doing enough to support the tech development in Nigeria?
Well,
I didn't say no. Please, for
well, when you say our chief regulator is doing enough to support the tech industry, right, in general, maybe we would point to the Startup Act that has just been enacted last week. Would I say that's 100% enough? No, but that's like more than 50% crossing the milestone. So a lot of barriers to coming into the tech industry. A lot of persons are skeptical. There's so much cost, and maybe they don't have an enabling regulatory environment. They're scared of regulators coming after them or stuff like that. But I think what the Startup Act, which was recently and was just enacted last week. Actually, this is like barely a week, right? And that's a law that was put together both by the stakeholders and the executives, and even some of the regulators or one of the chief regulators, depending on the regulator you're speaking to, do, right? So it was a joint process for this act and for this law to be put forward, and there are a lot of incentives in this act. Incidentally, my firm led the team that prepared the Startup Act. Yes, exactly. So we took into cognizance, because we deal in the startup space. We have a well-blown startup practice, and we understand some of the fine issues that startups face. So we took into cognizance these issues when drafting the law, right? And we tried to limit as much as possible in terms of implementation, where you find that there are proliferated agencies and people don't know where to go. So we just put everything together in one space. So ease of access as well as incentives come into the space. You get a label, and once you have your label, you're able to get certain incentives in terms of tax credits. Even your employees and investors who invest in these startups get tax credits as well. So that would definitely boost. We are in for a season to see a boost in the startup space. It's been done in other climes, and the result has been, the numbers are there to show that once there was a regulation like this, the numbers went up. Investment in the sector, startups were springing forth, there were businesses, there were jobs. So I'm sure in terms of the Startup Act that has just been enacted, which the regulator also fronted, right? We would see a boom in the tech startup space. They may not have done enough in the past or be doing enough, but with this singular legislation, I can say that there would be a very tremendous growth in the startup space that we're yet to see.
So let me push you a little bit. What about in the financial space? Do you think our chief regulator in the financial space is supporting startups? tech companies to grow and to foster, or do you think they are pushing these companies back to retail banking?
Well, I think that was one of the first questions you even asked me, but apparently you were interested in it. So I would say, like I think I had said initially, that you cannot really regulate this space so much, and you cannot say that regulations have cut across the issues so finely that there are no more outstanding issues. But there are regulations, and the chief regulator in the fintech space has put out regulations, yes, for the most part, to govern and also to protect consumers, right? Because the idea is we're in a fintech space, we want to push our business, but then we have consumers that also needs to be protected. So to some extent, yes. In terms of maybe the threshold of coming into the space as a fintech, in terms of maybe capital requirements, there may be some fine lines in terms of how much I can have to come into this space, and that may stifle, or you may say maybe has impeded some persons from coming into the space. But to what extent can you fault them? Because their policy, there are reasons for these decisions, right? But maybe one fine decision that everybody has taken a view that, oh, why did you have to ban an official channel for this sector, for this vertical sector of the fintech, right? We have companies, we have people. It was a budding space, youth, young people, ideas were budding. Everybody in one form or the other wanted to come into this space. But once there was should I say, an embargo on trading through the official channels, people started reclining, and these deals or these things were now being done no longer in the radar of the regulators, but in form of peer-to-peer, right? But generally, I would say, other than that regulation that seemed to have impeded inclusion in that space, and maybe a few other fine lines in terms of regulations, and like I said, capital requirements and some other regulations, I would say that there is a fair level of regulation. We still have much to be done, but we're getting there. I don't think we're not there yet, but we will get there.
Hello, Shay. Well, can I just say something?
So I was going to say she's not part of us. She's supporting the enemy.
Well, I don't know about the enemy part of it. You know, where they say that when there's a fight between an elephant and, let me not say anymore. So, but just to speak to what Perry said, I think the Startup Act, I've not read the signed act, but when it was passed by both houses, I got a copy of it and I read the approved bill. But Nigeria, sometimes between approval and signing, so I don't know what changed. But what I read was really encouraging, I must say.
Did you read the Twitter version? You saw yours on Twitter?
No, I saw maybe the Twitter version of it, but it was really encouraging. But talking about regulation, I think, yes, would fault regulators for a lot of things, that's the truth. But the truth is that there's nowhere in the world everywhere in the world, regulation plays catch up with innovation. You have to play catch up. Innovation will always be 2-3 steps ahead of regulation, no matter how robust the agency or the regulator is. Yes, but we might say, okay, the way we react locally, maybe instead of what you don't understand, you kill, instead of trying to get. So maybe that's where the challenge is, to instead of taking time to better understand and say, how do we ring fence? What are the risks around this? How do we ensure that those things are properly curtailed and minimized to the barest minimum? Because there's no way you're going to eliminate risk anyhow. We saw something today about a company in the US with all the regulations. $160 million moved, and they couldn't track it. So they're doing a good job, but can they do a whole lot more? Definitely.
Nasiri, you want to add?
Yes.
Go ahead,
I actually
please.
wanted to add.
Go ahead.
So, for the regulations that we
speak to your agency banking space.
Yeah, exactly.
Go ahead.
So today I find myself competing with a commercial bank when it comes to agency banking, and I shouldn't even have to do that on a regular day. So the thing is, I have the technology to reach this last mile. The commercial bank has the financial muscle to reach this last mile. So why can't there be some sort of fusion between the fintech and the commercial banks? Remember when I started my response earlier, I said most of the reasons why fintechs cannot actually do a lot or do a lot is because they do not have the financial capacity to reach these unbanked areas. And the reason is this: I have an investor who is giving me his funds to say, let's say, a year at a particular rate, and I am using this money to buy some POS terminals, using to pay for some expertise when it comes to tech. And I must make sure I get that money back before the end of the year because I have the investor breathing at my neck. So the point is, if I will add the financial capacity or the financial muscle of a commercial bank behind me, and in this case now, let me get into some technicalities. I'm using your TIDs. That means I'm moving all of this money, these collections, to your bank. That means everything I am doing is working through your bank, and I'm leveraging on your wallet system, such that the money is leaving your bank into another person's bank and coming back to you. One way or the other, you are enjoying everything you are set out to enjoy as a bank. And that way I'm enjoying the trickles, the one naira that I want to make per transaction. I am making it, and everybody is happy. But today, I find First Money having 100,000 agents. I find Access Closer 50,000 agents. And how do I cope? How do I compete in that kind of market? So I am typically set out to already fail unless I get foreign investors. That's why someone like me will not start looking for seed capital. And how many people, how many venture capitalists
Can have access
to such
excellent. I
finance?
mean, we can go on and on. They say time flies when you're having fun. I'm sitting with intellectuals here, and in 1 minute each, I would like you to put in your final statement. And my question to guide your final statements will be where we are today as a country, as a continent. Do you think we are doing well in the fintech, in the tech space compared to other climes, compared to other parts of the world? I'll start with you.
Thank you. I think Africa as a continent is the future for tech, especially the fintech, because we have the numbers. We have the numbers, we have the need, so to speak, the pain points that fintech companies are trying to solve are pretty much resident in Africa. So I think it's a no-brainer, and probably that's what drives the investment that's coming into the space in Africa. That, yes, I'm pretty much excited about the future, about what we can do. And it's also be amazing to know that in some certain areas, we are way ahead of some of these developed worlds in terms of technology in the fintech space. I was talking to somebody from Switzerland, and he says if you give him a check, it will take him 7 to 12 days. Even in the US today, you catch a check. I'm like, it's T+1 in Nigeria. you get value immediately. So you can imagine, so we're not doing so badly, so to speak. And because there's so many problems, and I always say, solutions gravitate to where you have the problems, and the problems are here. So the future is exciting for us as tech entrepreneurs.
All right, so just to take a cue from where it stopped, the future or the future of tech in Africa or in the world at large is domiciled in Nigeria. And I'll be saying this because there is a lot of problems. We have a lot of problems that can be solved by technology in Nigeria. I mean, today we've not even tapped into any form of solution to all the major problems that we have. So I believe that the deeper we get into trying to get solutions to this, the more elaborate or the more robust our tech space is, and the more revenue we can generate.
Thank you very much. Mary?
Okay, so while I will say that we're not where of course, we're going to, but there is traction. Maybe mistakes may have been made both by the startups and maybe the regulators. Maybe startups in terms of not seeking enough getting enough legal expertise on their team to put things together. And then also in terms of the regulators, maybe not studying the ecosystem as much to regulate it in such a way that people feel that you see them, you understand their business, and your regulations are being put out to foster their development, not to inhibit what they are seeking to do, because Nigerians are thriving. We want to build this, we want to build that, we want to do this. They just want to see a regulator that if I see someone who shares in my pain, or and maybe I feel you understand and you tell me what to do or how to do it, I would appreciate it more than if you came at me in a draconian style and trying to penalize me for everything. So I guess in that manner, both sectors, both the regulators and the startups should, put their radar down in terms of legal and regulation to ensure that there's development in this space.
Please put your hands together for our panelists. Excellent, excellent people. In discussing the topic, charting the new tech path, insurtech, agrotech, with me this afternoon has been the amazing lawyer, Temi Pere, senior associate at Alex. Alex is a law firm. Pere, thank you for coming. Really happy to have you. And also, people penetrating the nooks and crannies of Nigeria, Nasiru Shonoiki. Nasiru is the head of agency banking at Liberty Pay. Liberty Pay is an agency banking company. Nasiru, thank you so much for coming. And finally, with me today is Gerald Eri. Gerald Eri is also the CEO and co-founder of Last Mile Financials. He has been everywhere all over the world. Thank you so much, Gerald. And I'm your host, Waliola Jubu. I'm the MD Asset Microfinance Bank. We do banking and we do it well. Thank you for joining us this afternoon.
Thank you very much. Please, let's take quick pictures. Let's come together and take quick pictures. Thank you very much. Please, a round of applause for our speakers, our panelists and moderator. Thank you. So far, it's been an insightful time. It's been packed. We've had insightful sessions. We've had keynote presentations, panel discussions, master classes. We just had a really great time, even with the pitches. And as a teaser, tomorrow will begin by 8 a.m. with the networking breakfast. This is an opportunity for you to network over breakfast. So please don't miss it at 8 a.m. tomorrow. And then we'll have insightful sessions. Tomorrow, as a matter of fact, we're having a breakout session. So it's an opportunity to pick one of the sessions, be a part of it, and enjoy it. Ladies and gentlemen, you can invite other people to be a part of it here physically or virtually. They can join us physically at Landmark Lagos, or they can join us online. All you need to do, or all you need to tell them to do, is to register on nigeriafintechweek.org. So please invite more people to be a part of it. If you enjoyed it, you want to bring more people to be a part of it tomorrow. On this note, I'd like to say it's been a great time hosting this event. I look forward to a great time tomorrow as well. The conversation continues tomorrow. My name is Temi Badru. Enjoy the rest of your day.